Hi everyone, welcome to today's Friday open webinar for all our subscribers and customers. I want to welcome you to the live trading room with Steve Phillips, who's broadcasting from just outside Las Vegas, Gavin Holmes, myself. I'll talk about a little bit about me in a second, and I'm broadcasting from the New Forest National Park in Hampshire in England, and then we've got Danny Younes from Melbourne in Australia, who's about to publish his book that he's been working on for a long time, which we'll talk about. I'll get Danny to tell you about shortly. But we're going to look at some trades here right now. So we're not going to mess around. We've got a couple of things I just want to cover very quickly, because a lot of you, in fact, can I just ask, because a lot of people came into the database in the last 2 weeks. If you're new, this is your first presentation from Trade Guider Systems, could you please do me a favor? Could you just type into the chat window N for new? So just so I can see how many of you are here for the first time. Okay, welcome to all of you. I see Klaus Peter says it's the second. Fred, John, Toby, Nico, Steve, so Leah. Okay, quite a few of you here for the first time. Okay, so let me please start then by doing what we always do as we trade real money and live accounts in this room. I want you to be clear that Trade Guider is a registered company here in the UK, so I have to read this important disclaimer to you all. Trading stocks, options on stocks, futures, options on futures, and retail off-exchange foreign currency transactions, Forex, involve substantial risk of loss, and it's not suitable for all investors. Past performance, whether actual or indicated by historical test of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guider Limited is an authorised representative of Forex Max Limited and regulated by the Financial Conduct Authority in the United Kingdom, number 229906. So welcome to today's presentation. I'm the author of 2 books, Trading in the Shadow of the Smart Money, which I wrote nearly 6 years ago now, and the Complete Volume Spread Analysis System Explained. My name is Gavin Holmes. I'm now running a hedge fund here in the United Kingdom, but I still very much value my presentations to the public. I've stopped posting on YouTube now, but I still intend to do at least once or twice a month public events to help you understand how the markets truly work. But I'm very pleased to say that I've been able to hand off the baton, so to speak, to 2 great traders who will be very active in the public domain, and that is in just outside Las Vegas, Steve Phillips, who runs our live trading room that runs 5 days a week, every day for about 3 to 4 hours, looking at mainly futures and Forex, but also we're going to start implementing stocks as well and start doing more of that, because I've had lots of emails from people asking for a dedicated stock trading area. So I'm looking into that, just so you know. I'm also joined by, who is now an author, Danny Younes out in Melbourne, Australia, who's about to publish his book. And I'm not going to say any more about it. I'll let Danny talk a little bit about some of the strategies he's going to talk about there. But the main purpose of today is to show you some charts and to show you how the markets work. Now, I can tell you I'm running a hedge fund, but I didn't start my life and my career as a finance expert. In fact, I know very little about finance, or well, I did know little, until I met a guy called Tom Williams. And I originally started my career as a police officer, and it always got a bit of a laugh when Detective Holmes was asked to give evidence in court. Everyone was, of course, looking for Watson to back me up, but of course Watson wasn't around. But always got a good laugh. But the serious side is that when you think life is strange sometimes, this is where I've ended up. It was my 50th birthday in December of 2016, and I now travel the world, still doing presentations. I'm going doing presentations in March and April of next year in various countries. We'll announce that shortly. And this was my master. He passed away, unfortunately, in 2016 in November. His name is Tom Williams, and he is the inventor of the Wyckoff volume spread analysis methodology that we are going to share with you today. That is me. In fact, that was us in Poland doing a presentation. And we do speak, and we've done over 1,000 presentations now in many countries, both online like we're doing today and also live. Very briefly, one of the things we're going to be showing you today is something called the Smart Center Pro. Now, that is a hedge fund piece of software. It's aimed at hedge funds, institutional traders, prop traders. We've now got over 160 people using Smart Center Pro, so we've got a lot of feedback on the software itself. What it does, it takes the guesswork out of where the trades are, as you'll see, and then shows you where the highest probability lower risk trades are. But let me be clear, it isn't a buy-sell signal system. You don't just see green and buy and red and sell. You still have to do a little bit of analysis, but a lot less than you used to have to do. And we launched that product on October the 19th. It seems crikey, years ago, but it wasn't. It was only in October of 2016, and we presented that. We were very honoured to present that product live at the Chicago Mercantile Exchange headquarters in downtown Chicago. Now, I used to live in Chicago for 14 years. I'm married to an American, and I used to spend a lot of time on the various trading floors. So I've got a very good idea of how the smart money think and operate. And what we're going to share with you today is how that happens. Now, I'm not going to go through all of this presentation here, because what we've put together now is a introductory presentation, which I'm going to give you all. But I do want to share with you one thing, and hopefully this is only a 10-minute video I'm going to play to you. It's going to set the scene for one of the charts I'm going to show you today. So if you've seen this before, forgive me, but it's important, because one of the charts I'm going to show you today, this video will set the scene. So please just sit back for 10 minutes and have a listen, and then we're going to go straight to the British pound versus the US dollar.
What is a smart trader? A smart trader is someone who knows how the markets really work. They know how they move, why they move, and who and what moves them. Armed with this knowledge and understanding, they can trade in the markets alongside the major players. Smart traders are in the minority. The majority of retail traders and investors do not have this information. They rely on technical analysis and fundamental analysis to predict market movements. The problem for them is that on their own, these tools and methods don't work, which is why the large majority of traders lose to the markets. Remember, the market needs losers, many of them, so that the informed minority can win. Today, we'll show you how you can become a smart trader, trading in harmony with the professionals rather than trading alongside the herd. So why do so many traders lose? They lose because they've not grasped some fundamental facts which drive all markets. Fact number one. By far the largest players in the market are the hedge funds, investment banks, trading syndicates, such as Goldman Sachs, George Soros, and Berkshire Hathaway, headed up by Warren Buffett. These are organisations you've probably heard of, but there are many others which aren't publicly known. Together, they're by far the biggest players in the international trading community. At TradeGuider, we call them the smart money. Fact number two. The smart money have to make money, and they do this by selling at the top of the market and buying at the bottom. Fact number three. In order to do this, they have to move the market so that the prices rise to the top or fall to the bottom. So, how can they move the markets? Tom Williams, inventor of volume spread analysis, was a syndicate trader in the US and is one of the very few smart money traders to spill the beans on how the markets really work. He explains how the markets are moved.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low, depressed prices. And the best way to do that is to create bad news, put out rumours, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, you know, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions, like we might stand up and say, is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products. And of course, there was complete fabrication. then the directors would look at each other and sort of shrug their shoulders. But the audience heard that and they think, aye, they've got something going on, they're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all because we've bought in the lows. We're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing, if the opportunity is there.
Markets have always been manipulated. Here's just a few examples. Let's begin with the British petroleum oil spill disaster in 2010. On the 25th of June that year, the shares fell to just under $27. The news was grim, and the pundits and reporters were talking in terms of huge losses and a possible breakup of the company. And everyone who had shares was looking to sell in full expectation that prices were plummeting. And sell they did, straight into the hands of the smart money professionals who bought cheap. Within 6 months, the price of the stock doubled. Buy cheap, sell back when the market rises, and that's how the game is played. On May the 6th, 2010, something very strange happened in the financial markets. This day is now referred to as the flash crash, because no credible explanation has been provided by the regulatory authorities as to exactly what caused the crash or who was responsible. In fact, many investors begin to suspect that all was not what it seemed to be. CNBC's closing bell anchorwoman Maria Bartiromo was reporting on the day the flash crash happened. Fellow reporter Matt Nesto was explaining some unusual anomalies in a number of stocks, even though the mainstream media claimed that it was caused by a lone trader hitting the wrong button, B for billion instead of M for million. Maria saw through it straight away.
A penny. So those are at least 8 names that they're going to have to track down on top of the Accenture trade, where we have the stock price intraday showing us at least, we'll assume, a bogus trade of 0.
That is ridiculous. I mean, this really sounds like market manipulation to me. This is outrageous.
It happens a lot, Maria. It really does. I mean, we could probably ask the NASDAQ. They may not want to say exactly how often it happens, but it happens frequently, and they go back and they correct. And the thing that stinks is if you, in good faith, put in a trade and made money and then lost it, you lose it.
What we actually witnessed on May the 6th was a giant shakeout of the market. The smart money were expecting higher prices and wanted to catch the retail traders by marking the price down heavily before moving the price up. They were bullish, the stocks were going to rise, and they wanted to buy at the best possible price. Wouldn't you want to do the same? Buy it at the lowest price, knowing you could sell it later for much more than you bought it for. Qantas soars to record half-year profits is the headline on February the 23rd, 2016. Lower oil prices have helped Qantas post a record pre-tax profit, and best first half profit in the Australian Airlines 95-year history are used directly below the headline. All the news is bullish. The stock has been going up and up because it's in an uptrend. To the retail trading and investing community, this appeared to be a great opportunity to buy the stock because everything lined up. And if you didn't go into the market by now, you'd miss the move. Okay, so buy. What happened? The stock plummeted spectacularly, and the uninformed retail traders said bye-bye to their capital. That's the trading game. Buy low, sell high. Be a predator, a clever predator that understands exactly how the prey think and act. Smart traders appreciate this and understand that quite often all is not what it seems. The media, the sentiment and the emotions will often lead to poor trading decisions and big returns for the professionals. The good thing is that whilst the smart money try and disguise their activity, there's one place where they cannot hide: the price chart. And in this presentation, we're going to show you how to read the footprints left by the smart money on any price chart, whether it's a currency pair, a stock, commodity, or a derivative of some sort. In the next few hours, we're going to show you how the interrelation of price and volume can help us determine whether the smart money is buying, selling, or not participating. And it's this interrelation which forms the basis of the volume spread analysis methodology. We'll show you how you can identify the tops and bottoms of a market in foresight, not hindsight. We'll show you how you can use the 3-stage trading process, scan, confirm, trade, to form the basis of a powerful trading strategy so that you can trade in harmony with the smart money. We'll show you techniques that will help you manage your risk and optimize your trading. We'll show you why the media is key and how to trade the news and the volatility often caused by it. In the next few hours, you'll learn things which will enlighten you as to how the markets really work. And you'll discover knowledge that only a small fraction of the trading community know and understand. So what?
Okay, thanks everybody for watching that. Let's get to the point now. So what we're going to talk about today is trading in the shadow of the smart money, learning to trade in the same direction as the smart money. Now, I'm not going to spend any more time talking about the methodology because I'm going to show it to you live. But what I am going to give you is, all of you, if you haven't seen this, we've just updated our training course. And this is a free course, it lasts about an hour. So if you're, after this presentation, want to find out more, just go to this website. It's tradeguider.com/intro. I'll just make sure that site is active. I'm pretty certain it is because we just put it up there yesterday. So there's some new stuff in there. So just bear with me a sec. So www.tradeguider.com/intro should automatically go to a web page, which it does. Okay, and here, if you're new, if you're finding out more about what we do, we've got several modules in a course that will get you going very quickly. We've also got an article here, which if you click on it is going to be, well, I'll click on it now and you'll see for yourself, right? The secret trading strategy from the 1930s that hedge funds don't want you to know about. Now, you might say, well, Gavin, you're running a hedge fund. Why on earth are you teaching us this stuff? Very simple. Because what I learned from Tom Williams was that if you share knowledge and you give back to the community, whatever it is, whether it's a small community of the whole world as we deal with, it comes back to you 10 times. It's called the law of karma, and it does work, I can assure you. So I'm not trying to hide anything. We have strategies that are private for our fund, but we also have strategies that I'm going to show you today that work extremely well in all the markets, and we're going to show you. But this article is very interesting because it talks about the Wyckoff method. Can I just ask the audience here, how many of you here have heard of Richard Wyckoff, the trader? He was from the 1920s. Richard DeMille Wyckoff. Just yes or no. How many of you have heard of Wyckoff? Yeah, okay, pretty much everyone. Yeah, not particularly surprising. All right, then let's get straight to some charts and let's start looking at whether we've got any trades coming in. Now, I'm looking for a short here on the British pound. So what I'm going to do, this is the reason for the alert, right? We've got massive supply coming in. I've marked the bottom of the bar. We've now broken the trigger number just here, okay? So there's a potential short coming, but I've got to wait for the Smart Center Pro, which I'm about to show you, to alert me. Now, this is a 1 hour chart of the pound, and I want to just say to those of you that are new, what we teach you is that weakness, when it appears, will appear on an up bar, all right? An up bar, let me define that for you, is a price bar that closes higher than the close of the previous bar. Now we're looking at volume. Volume is extremely important to us. What is volume? It's at the bottom of the screen that you can see right there. Okay, that is volume. Right here, volume. Okay, every spike here is either what we call hypodermic volume, which and I'll explain this whole chart to you in a second. I'm just gonna put an order in on this pound trade here, to just bear with me, because it's approaching my trigger number right now. And what we'll do is I'm now going to switch on Smart Center Pro just to set the scene for today. Don't worry if you don't know what this is, I'll explain it. Just close that down for a second. This is the scanners. Don't worry about this for the moment. Let's just put Smart Center Pro on. Okay, so here we have Smart Center. Now we can see at the moment that not much is happening. Okay, I've got a lot of grey boxes, a lot of congestion in the market, and you can see the pound is moving in a tick 2-3 tick range. Now what I'm going to do, I'm just going to adjust my settings on this. And I'm just going to take out the volume thermometer. That's fine.
Trend and trend alignment to the upside has arrived.
And you see it makes a big difference when you make... Now, I'm not going to talk about the settings here because I've done a big webinar on that, but you can see here that the British pound has alerted me here in Smart Center Pro to a short setup, potential short trade. Why? First of all, the weekly chart is negative. That red box represents a time frame in Smart Center Pro. So you can see here, the weekly is negative. You can see the 8-hour chart, which is the 1440, which is 8 hours, is negative. The only chart that's in congestion at the moment is the 4-hour chart, the 240. The 60-minute is negative. The 15-minute is negative. The 5-minute is negative. The 1 minute, which I don't take much notice of, in fact, I might even remove this next week from the... It's just gone negative now, look, the 1 minute. So all of these are now in trend alignment. All I'm going to do here is click the black box, and now, as soon as a principle of VSA, which I'm going to teach you in a second, appears, same with the Dow, which is going up. So we're looking for longs at the moment in this system. We're looking for longs on the S&P, longs on the Dow, shorts on the pound. Okay? That's all this is doing. Now let me explain to you how the markets work and how the charts work. So this is a good example of the British pound. We'll go to the 60-minute chart here. And you can see, first of all, that the markets have got big volume and low volume, big volume and then very low volume. All of that is relevant because what we're talking about today is something called volume spread analysis. Now, most of you in this room, many of you are customers, know exactly what we're talking about when we talk about volume spread analysis, but quite a few of you are new. So let me explain what volume spread analysis is. The first thing we're going to look at, we've got some alerts coming in, just bear with me. Get rid of that. So the first thing we're going to observe here, and let me just get this order and just bear with me a sec. I've got a trigger number right below where we're currently at. Okay, good. Right, I've got my order in. Okay, so what we notice about the volume is very, very important because volume is activity. And if you've got a pen and paper, I'm going to say some things that you might want to write down. Okay, volume is activity. It's the activity of the professional side of the market. Now, we can see up here that as the pound began to rally, the volume on the up move went up dramatically. All right, so we had massive volume on the up bar. And it's got a red signal, not a green one here. On the down bars, where the market falls, it's got green indicators and the market goes up. So down here, on this high volume down bar, we had what we call climactic action. Now, in the trade guider system, everything is intuitive. It's not telling you to buy or sell. It's telling you what's happening based on 3 universal laws that drive the markets. The first law is the law of supply and demand. You might want to get a pen and paper and write some of this stuff down because it's going to help you. So that it's the thing that drives the markets is the law of supply and demand. The next is the law of cause and effect. Cause and effect. And the next one, which is what I think is one of the most important, is effort versus result. Now, the effort can be seen in the volume. Because here we have what we call ultra high volume coming into the market. Okay, ultra high volume coming into the market. All right, now when we see ultra high volume like this coming into the market, we observe it and we say to ourselves, right, is that all buying volume? Right, if that's all buying coming in here, and most traders who are looking at these hourly charts see this surge in volume and this big up move and they want to get long. And that's what we call a false breakout, because there's an old top to the left over here where the same thing happened on the same type of volume, not quite as big here, but you can see here the market was marked up rapidly to encourage anyone using a MACD or a stochastic or a mathematical formula based system. And what happens? The next bar closes lower. Now think about some simple logic here. Think about just some simple logic, right? If all of that volume was buying volume, How could the next price bar close lower? It couldn't. It simply couldn't. And this is the whole premise of VSA, in that what we note what we notice here, Rick's just asking a question. I wasn't using the 4, I'm using the hourly chart, and I'm using what's called a trigger number, okay, which I'll explain. All right, now I'm going to show you, well, Rick, I'll ask you this question. I'm going to put up in Smart Center Pro the scanner for the 6B. Now, Rick, this is for you. Let me ask you a question. What's the trend of price on the weekly chart based on the Smart Center Pro? You can see the color red. What's the trend of price here? All of you. What's the trend of price on the weekly chart? Right. What's the trend of price on the daily chart? What's the trend of price on the daily chart according to our scanners? Right? This is for everyone. Okay. The only chart that's gone into congestion at the moment is this 4-hour chart. But if that comes into play, which I believe it will, then all of this is already turning over. We can already see that since the trap up move came in place, it's broken this low of this trigger number, the trigger bar. That's the highest volume bar on the chart. But I want you to notice something. This is important. What do you notice about the shape here of this particular instrument? What do you notice about the shape? What do you notice about the shape of the chart? This is a classic example of distribution happening in the pound, which is why this bottom of this bar is the high. I mean, look, if you imagine, right, this is the volume, okay? The last time we had volume of that sort of size was over here. The market was marked up with a red signal. Look at the move. We then had some buying coming in down here. There's definitely buying. Then we had a big move up. But look, they started to sell into this move on bullish news that the pound was going to go up. Here's all your distribution at the top. And that's why we're falling. And because, ladies and gentlemen, here's another one for your pens. 2 rules you should keep in mind. Rule number 1. When weakness appears, it appears on an up bar. And an up bar is a price bar, okay, that is higher, or a price bar that's closed higher than the close of the previous bar. An up bar, okay, I've got to manage this. Sorry, I've just been filled, so I'm going to just manage this through quickly. So I've already got filled here on the pound. Okay, so now I'm going to try and catch this move down because it's gone right through my trigger number, which is fine. So first thing, break even, as we always know. Okay, so now stop at break even. If I get stopped out here, I'm not going to lose any money, but if it runs, I'm going to let this run all the way down to my next trigger area, which is 2138. And at 2138, I'm going to start moving the stop down to chase this. And again, in the Forex market, we actually had, which is interesting, an alert come in on my other screen here for the short on the pound in Forex. It hasn't quite come in yet on the futures, but everything was aligning. Again, I mentioned, you go with the flow. You trade in harmony with the trend. Okay, now I'll explain this all to you in a second. But let's just watch what this now does, because it's the trigger number's been broken. It came down, hit the trigger here, and then it's breached it. Why do I bring the stop to break even quickly? Because I don't want to lose money, John. If I get stopped out, it doesn't matter. I can get back in. You can always get back in. The thing is, I don't want to give money back to the market. I've had a very good week. If this runs, I'm protected here. Most traders, unfortunately, if it bounces back up, and sometimes they'll do that before a big run, right, you'll be in a negative position. I don't like being in a negative position. I like to make money. That's my job, right? So I always have a rule. Protection of capital is my number 1 rule, right? Regardless if I'm trading publicly or privately. I was talking to Danny yesterday. He'll probably confirm this. And in the middle of proofreading his book, I saw an alert, took the trade on the pound. And within, literally, it was 20 minutes, had made about $300. just on one contract. I'm only trading 2 lots here on this small account. By the way, just to be clear, this is a live account, 4855 Infinity Futures, and I'm actually trading 2 lots on the British pound here. And the reason I put 2 in rather than 1 was because the probability of this moving lower is extremely high based on the trigger number now being broken. I haven't got a preset target, no, Steve. The Smart Center Pro on Forex has got a target of 1.2138 is where it's looking at there. That's where there's some support here, down here. But if it breaks this area, it's already broken some serious support in the background. So this is the first trade of the day. Now, in the live trading session with Steve and myself, we sometimes have to wait 2 or 3 hours for trades. As it happens today, the one trade that we're setting up was, in fact, the British pound. And if I bring up, actually, let's just bring up quickly Smart Center Pro, and you'll see something that's quite interesting here, is what I notice here, and the British pound on the 5-minute chart in Forex, it's already come up with what we call no demand. Okay, but you can see now everything on the smaller time frames are aligning. But look over here on the 5-minute chart, this was just before we started, was the trap up move, all right, which I'll explain to you. It's one of my favorite principles in VSA. If we come over and look at the 5-minute chart, we can see the trap up moves here, all right, which is there. Now we're coming into a support level here, right down here. Now we'll have to watch what this signal tells us. If it closes in the middle of the bar, then that's going to be buying. We'll have a green signal here, and it probably is going to pop. If it closes on the low of the bar, it's going to confirm that this is going to run. You don't know. But the one thing I do know is I can relax because my stop is at break even. Okay, I've got a trade coming in here on the YM, the Dow Jones. So I'm going to go and have a look at that. Just bear with me. On the other chart, I'm not going to break charts at the moment. We'll stay with where we're currently at. See, that's now, unfortunately, has closed off the low. So that could well be some buying coming in. But it's interesting, it hasn't produced a green signal. So we're waiting to see what happens here. No problem. There's your trap up move. We may well get another run on this one. If it closes now below the close of this bar on the next 5 minutes, then this will run lower. Okay. No, Pavel, I'm not. I'm using MT4 on the other computer. Pavel, I'm actually using MT4 on a second machine. I'll show you that in a second, actually.
Sign of weakness has arrived.
Okay, so we just got a bit of no demand here. Okay, looks like I'm going to get stopped out break even here potentially. It's very interesting though. If this didn't get hit, so let's have a look at the 1 minute chart on the British pound here. Yeah, they've done this deliberately. There's buying coming in. You don't know that's going to happen when you go short. There's a little bit of that lack of interest. If it closes below this bar, we'll be fine. But that is definitely some buying. You can't argue with that. There's the signal. Okay, you've got potential climactic action. They tested it, so they're just pushing it back up because we've had such a big down move from up here. I may be a little bit late to the party, but that's fine. I wanted to show you a live alert that came in, and you can see it's come in here. Now what has to happen? Read the dialog box. It's an up bar with volume less than the previous 2 bars, shows lack of interest as the market rises. Study the background carefully, okay, which we'll do. This indicator works best when there is weakness in the background. Well, there definitely is, okay? With strength in the background, give less significance to the indicator. This is very important, guys. The next bar should close lower to confirm the indicator. That's very important. This next bar should close lower than the close of the previous bar to confirm the indication, okay? Now, we did have that happen up here. These bars here were not confirmed. Notice that the red arrows are shaded out, means not confirmed. If this closes lower than the close of that bar, that will turn solid red, okay, which will mean it's now confirmed. And what I would hope to happen then, and you don't know, when we're only trading probability, is the market will come and retest this buying where the high volume is down to here, all right, and that's where, if the support holds, we'll bounce. If it doesn't hold, it'll run all the way down to 1.2138. Right, it's closed lower, it's solid, right? Actually, that's saying it's an upthrust, in fact. Yeah, interesting. You've got no demand and you've got an upthrust because it closed level with the bar. So it didn't close lower, it closed level, as you can see. Now we've got a lower close. So let's see, we'll watch live as this market starts to make its decision. This here is what's causing the downward movement. And in fact, if we look at the bigger time frame, we go to the 60-minute chart, you can clearly see here the distribution phase, hence the reason for the alert to you all that there could be a potential collapse in a currency. It has to start to run, right, below the low of this next bar. You see where the weakness started here? You've got high volume here and high volume here, right? This bottom of this bar is going to act as strong resistance to an upward movement because there's a lot of volume on it. Okay, we've taken out the support level, right? Now what I'm looking for is this 1.2138 level to be attacked. If that happens, then it's going to come all the way down to here. I don't know if it's going to happen today, but it may happen on Monday. Okay, that's when we might see that big movement. Okay, I've got a lot of questions coming in. Bear with me, guys, because I just want to focus in on the trade here, please. So can you keep the questions back for a second while I just keep an eye on this? I may be adding to the big account as well. I've got to trade short on the Forex, so I may be adding to the position here. So let's just keep an eye out what the Smart Center Pro is telling us. Okay, so it's already told me here that the trade was set up here on the 1 minute chart, but I was already short, so it didn't matter. But you can see here, here's the no demand, here's the upthrust. So you know,
trend alignment to the upside has arrived.
Okay, we've got another one, so that's on the Nasdaq. So the indices are pushing higher, and the currencies are pushing lower. Okay, starting to break down to my target now. Okay, 38 is where I'm looking at. Good. Now into profit. Now we'll see if this runs. Now we'll see if this runs. 38 is the level where we're going to find support. May find some support here as well. Whatever happens, now profitable trade. If it breaks 38, I'm going to put the stop through to 38 and take my profit. Everything's based on Smart Center Pro here. Everything I've done is based on the alert, the principles that are there, no demand. Here's your supply. Here's your downward movement. Everything's now aligning to the downside. Gives me confidence to say that this is going to fall further. Now, I know that this level, the 2138 is support. So I've brought my stop through. Now, I'm trading a one lot here, by the way, on this particular chart. I've got one lot here. Sorry, I've got two lots, beg your pardon. I don't know why it's got one there, but I need to keep an eye on that. I did actually put two lots in. Let me double check. Yeah. Well, not to worry. It's definitely running two lots. I don't know why it's because I can see. Oh, I know why. Because I put two stops in. That's fine. Yeah, I understand that. Okay. So 2138 is the level. That's my target level. Let's take the profit right there. Okay, now I'm going to get back in with the two lots again. It's going to pop up here. Let me show you the 1 minute chart and the reason that I think we're going to get a secondary trade at a higher price. Now here, that's exactly what I thought they'd do. They've come down to 2138 to the tick. If we have a look at the actual level there, you can see it came to 2138. Now, the question is, now we've got to find another principle to get back in. So what I'm going to do, I'm going to go back to Smart Center Pro, already made some profit there on the trade. I'm going to reset the 6B. And I'm now going to go and, so you can see there, what I'm going to do, that's already happened, but I want to see if there's going to be some other things happening. So what I'm going to do is I'm just going to click on that and I'm going to restore the instrument for scanning now. Okay, so any other sign of weakness that appears, that was the 1 minute chart that came in. There was the upthrust and the no demand bar, and it moved down quite significantly. I'm going to put a resting order down below the 2138 level because I think if it breaks that, it's going to come down very, very quickly. And if there's any questions, please keep them to, just give me a minute because I need to keep focused on this.
Trend alignment to the downside has arrived.
Okay. Now we're looking for the break of this next level. I've got the order in at 2137. I'm not filled yet. So we'll wait and see what happens here. And we've also got we've got the Dow Jones and the NASDAQ coming up with trades. Okay, they're also alerts. Let's go and have a look at them. Okay, I'm nearly filled on the, yeah, I am filled. So let's have a quick look at the NASDAQ. Okay, now this is giving long alerts on the smaller time frame. Okay, so we've just had a test in a rising market. That's one of my favorite principles. Now it's a bit choppy here. It's not quite as obvious as the pound. So this I'm going to avoid at the moment because the diamonds here have turned grey. If they start to turn green, I would be looking for a long trade in this instrument. The reason being, no, I wouldn't be long up here at the moment. Little bit too risky. Little bit too risky. If this tests here on the 15-minute chart, there's a potential long trade. It could be absorption volume, which is a strong sign of strength. So it could actually rally quite heavily. Christian, I saw your support ticket. I'll answer that separately. Okay, well, I can answer it now, actually. Let's answer it now. Gavin, I need an explanation. I suppose that I have 50 bars for trigger and 2 or 3 ultra-high volume bars in this 50 bars. Which is the trigger? The last ultra-high volume bar? No. Christian, it's the highest volume bar. It's the highest one, not the last one. All of them are important. Don't disregard any high volume, ultra-high volume bars. But if we look here at the British pound on the 60-minute chart, right? 60-minute. What's the most important bar on that chart right now? It's that one. These ones here, not particularly relevant. That one is what I'm using as the trigger. Okay, and that one is where you can put, if you wanted to swing trade this, you could put a stop just above there. It'd be very unlikely to fall below that. Okay, so that is your trigger. It's the highest volume bar, and I'm using 100 bars. And in 100 bars, right, I can see that that's the highest. So for me, that's the reason I did this seminar today. Supply coming in, potential buying climax, supply coming in, and the trap up move. And the result, as you've seen today, a trade immediately that we came on air, right, live. Nothing that I've already been trading this before, yesterday. I traded all the way down yesterday, right? And I still believe this is going to come all the way down to this level. But that's going to be for next week. And I'm going to run a live trading room with Steve next Tuesday, especially to cover this. Because it won't happen Monday. I think it'll happen on Tuesday. And I've got good reason for saying that, but I'm not going to say so publicly. But I believe, yeah, it'll move lower. Definitely. Because you can't argue with the fact that there's a distribution phase in place. Now, I know a lot of you are new are saying, hold on a second, Gavin, you're saying that we should be looking for shorts as the market's going up. Yeah, because professional money have bought lower and they're selling higher. They can't make a profit at buying here and then selling it down there. I mean, if you read Danny's book, which is an excellent book, by the way, you'll understand that markets, every market works the same as any market would, right? Is that you're looking to buy something low and sell it at profit. So if I buy an orange from my market stall for £1 or $1, I can't sell it for 50 cents or 50 pence and make a profit. But if I buy that orange and I buy it for, say, 50 pence, I need to mark it up, right, to make a profit. Simple as that. Now, I've got this NASDAQ trade is starting to look up quite interesting, actually, because what's happened is this market is very choppy at the moment because the Federal Reserve have just spoken, okay? So we've got the Fed speaking at the moment, all right? So the Fed are speaking right now. Now, with that in mind, with the Fed speaking, okay, you know there's going to be some movement. So we know that the ES is trying to push up, which is a good sign. At the moment, the British pound is starting to try to hold this level, which is not surprising. The 38 level, I said, would be support, which it is. It's not really broken that at the moment. So we'll see if the key level now is to break that 38 and come down much further. Now, where the other trade alerts are coming in is on the Dow Jones and, of course, the NASDAQ. Now, the Dow is looking more interesting. Yesterday, we have got a test. For our chart, we've got a test. This is why it's popped up. 60-minute chart, little bit of weakness coming in, but we've got the buying on the down bars. This is something you'll learn if you become a customer of ours. If you're not already a customer, this is something you'll learn. Let's go to Smart Center Pro again. Let's see what we've got. So British pound, we're going to reset. So now it's looking for shorts again on the British pound. Because remember, weakness appears on up moves, not down moves. Copper, got a nice alert there. And of course here, I'm just going to reset this for scanning. Okay, let's just put an order in on the Dow then. Let's just have a quick look at where the area is. Yeah, it's very clear. They've tested it. It's pushing up. Now we're looking for another test on the Dow, and I'll take a long, and I would go long here because they're pushing it up, and this is a key support level on the Dow.
Trend alignment to the upside has arrived.
And because there it is, it's now triggered. So any sign of strength on the Dow, we will get. Okay, I'm just filled on the, oh no, I didn't get filled on that, sorry. That's the NASDAQ I'm looking at here. 15-minute chart. We're looking for this to test. This is the area I'm focusing on at the moment, is the Dow. We've got low volume, narrow spread bar into this area. If that holds, that will push higher, because you've got the same thing happening. The market's pushed up on high volume. It's very high. But if they test that, they're going to mark it up another level. Okay, let's go and look at some of the other charts while we're actually watching through what's going on here. Aussie dollar, same situation here. Okay, trap up move. Very clear, right? Same result as we've seen in the pound. 15-minute chart, push lower, having a little bounce. Both of them are, the pound and the Aussie, which is what you'd expect at that level. Look at that. That's where weakness is. Look, they've done the same thing. It looks the same. Okay, distribution phase, lovely mushroom. That's what we call in my book, if you read my book, a gotcha bar. Next bar down, closes near its low. All right, let's just see if there's any questions before. Yeah, Charles, so I just saw your question. It's the highest bar with it. Well, I'll show you. In Smart Center Pro, this is what we do. There's settings in here. Okay, so it's called a trigger number, all right, which triggers the trade. It actually, like it did with the British pound that you just saw, it triggers the trade. Now, we saw here, I'm asking the software here, okay, to use a trigger number. So that's when the alert will come up when it's in the trigger number. It's looking at 25 bars on my particular strategy that I'm using. However, you could look at other strategies. You could look at, oh, I've got, hold on, let me just put this market order in on the NASDAQ. Just bear with me. Okay, that's on the NASDAQ now. I've just put an order underneath here. Sorry, above. Let me show you. NASDAQ, all right. This here, okay, is looking very much
trend alignment to the upside has arrived.
Yeah, and they're all setting up now. Look, the ES is bullish, the NASDAQ is bullish at the moment. British pound still the same, and that's all still the same. Let me just show you on the 1 minute chart here what's going on. Where they tested this level, it's held. You see, they're not responding to any weakness at the moment on the NASI. That's one of my favorite principles to test. Now, any other testing that we see on the NASDAQ, okay, means we're going to break this top. So what we want to look, it's already responding now. It didn't respond initially on the 1 minute chart, but it's interesting on the 5 minute chart, which you know, there is a shakeout there. So this is looking potentially quite bullish. Okay, so there's your example of, look, this is a beautiful example actually of weakness on the up bar with strength on the down bar. All right, and the alert was for longs, wasn't it? About 10 minutes ago, you can see here. Now, I didn't get into the trade yet. I'm waiting for a breakout. So I'm just being a little bit more cautious. But you can see here, if we look at the Dow and we look at the NASDAQ in the Smart Center Pro, you're going to see they're all doing the same thing. They're all saying trade in harmony with the trend. The weekly, as we can see, the weekly is up. The daily's up. We've got two key VSA principles, which are signs of strength, which happened on the 8-hour chart yesterday and the day before. Here, a bottom reversal. Here, a 2-bar reversal. And then 5 minutes ago, or an hour ago now, a bottom reversal on the 5-minute chart of the NASDAQ. If we go and have a look at that principle, you can quite clearly see bottom reversal, right? The market goes up, they sell into it, they buy it back at the top of the trigger bar. That is the trigger. And I'll show you how the software recognizes that. Because what it does...
Sign of strength has arrived.
Okay, you've got sign of strength on the NASI. 1 minute. Yep, so we're going to take that trade. Just bear with me. Okay, so now we've got the NASDAQ here. We'll watch this through. So the alert was long. What we want to wait for to see if this holds. This is the resistance level. So I'm only looking for a scalp trade here. 5-minute chart. You've got your shakeout. Okay. You've got your move up. And we'll just see where this ends up. We need this to close up on the high potentially. Okay, so we've closed in the middle of this bar. So we now want the next bar to take out this top. So there's the test. The test failed initially. Okay, so when you have a test like that, if the bar closes lower, it deems to have failed initially. So we need to take out the top of this bar, okay, and then if it resumes an upward trend, these will start to turn green again. So I'm going to stay with the NASDAQ for the moment. Just have a look at the bigger time frame. Yeah, this is quite interesting. You have widespread up there, closing level. The next bar closes higher, right? And it closes just a little bit higher. So the market here is being supported. Notice the narrowing of the spreads, the breakout. I wouldn't be at all surprised to see here a blow off to the upside here, just a move up higher. Because if the market's bullish, when you see a sign of weakness and the market doesn't respond to it, it means the market must be strong. That's one of the things that Tom taught me. Okay, so let's follow this through. So what we've got, just talk you through again what's going on so you know what's happening here. We've had an alert on the NASDAQ to go long, okay? The trend is up, all right? We've had a test, okay? So if we pull up the scanner, if I left click on the indicator, it'll tell me what to look out for, okay? A test is a markdown during the day, and it said it can be any time frame, by the way, to challenge any weak holders to panic and sell. If they do not sell, the price rebounds up towards the middle or high and volume is low. This can be high in the futures market. This lack of selling gives professionals confidence that they do not have to absorb large amounts of supply. Add extra weight if the low of the bar is into fresh new low ground and also is on a down bar. Okay? Tests on low volume in the cash market will cause the professionals to enter the futures market, resulting in higher volume there. This indicator appears following a recent sign of weakness. Well, it did. Recent sign of weakness, right? Followed by a test. All right? So basically they're testing these levels, and we'd hope to see another one coming in.
Sorry, I didn't understand the question I heard.
Oh, it's my Amazon Alexa talking to me in the background there. Thank you, Alexa. But you can see here, so what we've got is we've got a test here, all right? And immediately the test of after the no demand resulted in higher prices at the moment. I'd like to see another test of this level, all right? It's fairly choppy at the moment, but we can see everything's green. And over here, well, what was that, 20, maybe an hour ago now, you had the reversal. And all of this would have been, you would have been alerted to. Now we are at resistance, we're at a new high, so this is a lot of resistance up here. But just going to be careful there with this resistance line. So I'd like to show you a principle appear live. That would be nice if we could do that. Can't, we're doing this live, so, we're not using PowerPoint. I can't take any questions at the moment, guys. Looks like this test is going to hold here, or they're going to put some stopping volume in. We'll have a look. British pound still falling nicely. Could be some stopping volume here. Right, we've also got an alert come in on, well, I don't trade this contract, but for any of you that do, you can see there's an alert come in here. I don't need that because I'm not actually trading that at the moment. Okay, I'm just going to restore this now. Okay, so we've got the trend up. Any sign of strength now in the bigger time frame. Remember, we're not worried about a pullback necessarily because strength appears on down bars, as we can see. Here it pulled back, the volume came in, up it went. Here we came down, shook out the market. Okay, it pushed up higher, and at the moment it's pushing down lower. But this could be more buying coming in which case, there we go. So, and the ES has come in as well. So they're doing the same on all of these instruments now, is they're bringing it down to test lower levels. That's exactly how the market has to work. So I'm just looking at my Forex charts here to see if we've got any alerts on there. Okay. All right, let me just show you the Forex charts quickly before I hand over to Danny quickly, because I know it's late for him. And we've got quite a lot going on here. No, it should be me, just bear with me. All right, tell me where you can see my screen, guys. Yeah, Mark, we've taken a trade there. Actually, there's another one coming here on the NASDAQ. So we've just been alerted to a secondary trade on the NASI. It is actually being marked down. And lo and behold, they're doing exactly what we thought they'd do. They're testing this level. And the ES, quick look. Same. So this is critical now on the 1 minute chart of the ES. We want to see this change behavior and start to push higher. They've basically, this is incredibly choppy on the 1 minute chart. It's had its up move, right, as you can see. So it's had a nice up move. It's moved sideways and they're testing this level. All right, now it's following a big uptrend, because if we look here at Smart Center Pro, you can see, look, the weekly, the 4 hour, all of these time frames are going up, which they have been. Now they're marking it down, which is why this has turned red for testing. You don't want to go long just yet. You want to wait for this to turn green, because you'll get another green indicator coming in, as we did have on the NASDAQ. Remember, with testing, it has to happen on a down bar, because you have to buy at lower prices. So don't be surprised that the market will fall for testing. But a bit of a similar situation with the British pound. They're marking it up a little bit here, right? Because there's a little bit of support ready for the next down move. This is where the level is, where the trap up move is. And it's same on the Aussie dollar. Okay, same scenario. This is the 60-minute Aussie. Here is the distribution phase, just to be very clear. Ah, sorry, we're looking at a different chart. Beg your pardon. I'm MT4. Sorry, that's better. I'm back on the right screen. Right, let's go to the Forex here. Right, can everyone see my MT4 platform, please? And you should be able to see on the left here. Okay. Good. You can all see it. Okay, so just bear with me. What we're going to do here. Okay. All right, so we've got 3 or 4 alerts here. There you go. Should be able to see that now. All right, can everyone see my screen? Sorry about that. Had a bit of a choppy changeover there. Hello, Sinan. Nice to see you as well. And hello, John. Good to see you. Good. Right, can everyone see my screen? Good. All right, we've got some alerts firing off still in the futures market here as well. So I'm just keeping an eye on that on the other screen. Especially the ES is looking like it's trying to find support. Just have a quick look. Okay. All right, so what we can see here, British pound has come up with the black box. Now this is a very important principle. It means that there's likely to be a fairly explosive move coming in the Forex of the British pound. Now we can see again today on the British pound in MT4 we had several alerts for shorts as well. I happen to have traded today the futures contract of the pound, but this is now the Forex, the spot Forex contract. Now what you're going to see here is we've got an alert for trend alignment in the pound. Okay, if I come all the way over to here, just going to check that's fine. So what I'm going to do, left click, and what we can see here is the weekly's down, exactly the same situation. The daily's down, congestion on the 4 hour, almost identical to the Forex market. Over here, you've got your no demand, you've got your trap up move, which is in the background there. Just to show you that, trap up move. And then you can see on the smaller time frames, right, the British pound is just starting to roll over. Now over here, no demand. All right, so that means that the pound has been marked up and has become weaker. On the other hand, we've had alerts to go long on the indices. Okay, so the S&P has issued a long alert, and the NASDAQ. Now they're marking it down. Remember, this is important, that when strength appears, it appears on down bars, not up bars. So if you're in a trade and you're long and it starts to push down, then in my case, you either add to the position or you wait for the next opportunity to buy at lower prices, because that's how the market has to work. Now, I can give you a key level on the E-mini S&P. We've got a target on there at the moment, according to my calculations, that it should hit 2273. That's the area that they want to come and relook at. So on the E-mini S&P, that's where I'm seeing the next trade. Okay, E-mini S&P. Now, looking at the Forex markets, we've got a lot of congestion in a lot of the different currency pairs. But what we do have, we've got trend alignment on the GBP CAD. Okay, we've got trend alignment to the downside on the GBP Swissy. Again, all I'm doing is left clicking in the box, and it's automatically now searching for the trade setup, just like you saw in the British pound earlier. And the same here, it's now scanning. Now, a couple of things to keep in mind. When Smart Center Pro is set like this, it's ready to give you an audible alert. All right, that's what it's going to do. It's going to give you an audible alert as and when that market actually gets triggered, when the trade actually gets triggered. It's not going to do anything until the trade has actually been triggered. Okay, now this is the British pound. Okay, we can see on the hourly chart on the Forex, it looks almost the same as the future. Supply came in, selling pressure, supply coming in, the trap up move, almost the same signals. Now this proves a very, very valid point, that the volume in Forex works beyond reasonable doubt. And what do I mean by that? A lot of magazine articles I read incorrectly state you cannot use volume in Forex. That you cannot use volume in Forex. Well, I'm sorry, that is incorrect. If they're telling you that, they're telling you an untruth. Because I've read a lot of articles saying that volume in Forex doesn't work. Volume in Forex absolutely works, as we can see here. Weakness, 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 fall in price. Okay, a little bit of support coming in now on the downside, almost at the level I said, 38, which was a key level. Well, I've been using active trades, and I use a company called Think Forex in Australia, and I put the two platforms together and I see the same, very similar volume on both. You can see though that, you know, the signals are the same, so the volume must be correct, right? So this volume is tick volume. Robin was asking, can I trust the feed? Well, I've been trading Forex for a few years now, and I've been with active trades for nearly 2 years, and I have not had any major issues. I had one issue where the platform froze while I was in a trade, but that was 7 or 8 months ago. Other than that, you know, you trade what you see. Look, that volume was there. They don't change the volume. Here, 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 and here. Okay. No, they closed on that particular trade, Mark. They closed my trade for me, and I didn't lose any money at all. They reimbursed me, so I didn't lose any money. They were very good about it as well. George says, what's the difference between signals from the scanner and Smart Center? There is a difference. Smart Center is looking at more information than just the scanners did. The scanners, for instance, give you the principles. The scanner will give you email alerts as well to tell you that there is a principle that's appeared, all right? But what Smart Center Pro does that the scanner doesn't do is it monitors every single principle, but based on settings that you set for yourself. So look, if you want to search for certain signals, you just click on here, the blue box, save and exit. So you can search for end of a rising market. You can search for stopping volume. You can search for demand overcoming supply. At the moment, I'm searching for testing, which is a powerful signal, of course, and I'm looking for no supply bars. In a rising market, that's what you look for. So you can set your indicators, which ones you want to look for. You can then look for what we call trigger numbers. Now, remember, if you've read my book, I'm a big believer in triggers. And you saw the trade today on the British pound based on a trigger number. The market had retraced to a level that had gone up on no demand. You saw that. That broke my trigger number. As soon as that has alerted, it came up with a trade setup to short the pound, and that's exactly what happened. And that's why the trade worked. Okay. Miguel, my colleague Steve is actually going to look at gold, so don't worry about that. Now, what I want to do, because it's late in Australia, is I want to quickly introduce you to Danny Younes. Okay, Danny. Danny has written a book, a brilliant book, by the way. He'll tell you a little bit about it. And it's a book that I'm highly recommending because it talks about option strategies. Now, can I just ask you before we carry on here, can you just tell me what you all trade? What do you trade before we move on? We haven't lost anybody, by the way. Everyone's still here. So what do you all trade? Okay, if you're an options trader, you're going to love what Danny's going to show you, but a lot of Forex, okay. Forex, loads of people on Forex, lots of stock traders as well. Okay, right. Well, let me introduce you then, and I'll bring in Danny. He'll talk you through just a couple of things that are in the book, and then obviously the book will be published next week, we hope, or the week after. There's a few people proofreading it at the moment. Just so you know, at the moment, just so you're aware, there is a long trade alert on the, let me just show you it on the, I'll just show you that before I hand to Danny. So we had a long trade alert here on the E-mini S&P. Okay, the target's 2273. I'm actually in the position at the moment on this one. Okay, so I took the trade. So I was filled at 2270, and I've got a target up here of 2273. Okay, and that's what I'm going to be looking for to take the profit. But if it breaks that, I might actually even add to the position. So with that, Danny, back over to you.
Hello, Gav. Can you hear me?
Yep, I can, mate. Over to you. And is that a couple of long alerts there on the NASDAQ and the S&P from Smart Center Pro, and again, looking very bullish at the moment. Back over to you.
Cool. Yeah. So like, so as Gavin was saying, I've written a book titled "Supercharge Your Retirement Account Using Wyckoff Volume Spread Analysis." Now, the reason why I wrote this book, and I've been, wanting to write this book for a long time, because going back about 5-6 years now, I've been teaching about options and trading options over stocks, all over the world. So I've travelled and taught people how to trade options over their shares, because what I find is that a lot of traders just buy and hold stock, right? And they're just waiting for the share price to go up, and there's no guarantee that the actual share price will go up. Okay, so just think of, let's say you own a property, a property, and you don't rent it out. Okay, so if you don't rent out the stock, you're only relying on the actual if you don't rent out the property, you're only relying on the property prices going up for you to make money. Same thing occurs in the share market. A lot of people buy stock, hold, and just wait for it to go up in order for them to make money. But what I teach is that why not use options to generate a income on a weekly or monthly basis over your shares. Okay, so and one chart that I look at in my book is a chart of BHP. Okay, so there was hype around BHP. China was buying up, because they buy a lot of coal, and they were stating that the price of BHP is going to go up, because China's involved, all that sort of stuff. Okay, so but if you bought BHP on the highs, and which was around about 48, I think it was about $48 or so. Since that time when that news came out, the share price of BHP had fallen, okay, and it had fallen down all the way down towards around about $18. All right, so if you bought the stock at at $48, and now it's currently trading at 18, then you've made a loss. But what I teach in the book is why not use options? So let's say you're holding that stock for the long term. Why not use options to generate an income on a monthly basis, and you can generate an income even if the stock is going down. Okay, so
Danny,
so if
Danny, are you going to show a chart at all or anything, or are you going to show the front page of your book? Because they're thinking they're missing something.
Oh, okay. Let me just. Oh, sorry, I didn't see my.
Just put. I mean, otherwise, I can't project a chart, but yeah, if you've got something, you can show them the front page or something of the book.
Okay. Yep. Let me just. Yep. Give me 1 second. I'll just go to my correct screen.
Yeah, for those of you that typed in, it wasn't actually projecting at the time, so
sorry, folks.
Don't worry. There you go. This is an example of the book. There you go. Okay, Danny, back over.
Right. Okay, so let me just go to that chart. Here we go. Okay, so that's the BHP chart that I was referring to. Okay, so went up to a high of $45.30. Okay, so since that high, the share price of BHP collapsed, and if you're just buying holding, okay, then you're in a losing trade. So with the book, I teach how to use options to generate a income, so that if you're in a stock that is declining in value, right, why not generate a income on a weekly or a monthly basis, right? So that you can recoup your losses. Okay, so that's one thing that I teach in the book. And the other thing, which a lot of people do not do, is that they do not insure their share portfolio. Can you tell me, have you ever heard of insuring your shares? Just type in yes or no. Do you know that you can actually insure your shares? And there's a lot of people typing no. Right? All the comments coming in. There's a few that know, but a lot of people, right, do not know that you can actually insure your shares. Okay, so people are buying shares, and their risk is 100% because they're not insured, they're not covered. All right, so think about this: would you drive a car without a insurance policy on it? No, you wouldn't. Okay, would you not insure your home and contents? No, you wouldn't. All right, so in the share market, you can actually insure your shares, and we do that by put options, and I actually go through that in my book. Okay, so I'll go through the basics of options and how to insure your shares and how to generate income on your shares, and also talk about the VSA principles as well, and how we can tie that in to options trading. Okay, so and then I'll go through a stock selection criteria based on our VSA, and then go through and I've also put in my trading plan as well. So all that is covered in the book. So yeah, so it's a book that I've been meaning to write for quite some time, and I did do it over the last 3 to 4 months. Yeah, and I hope this book gives you a lot more knowledge about how options works in the markets. And this strategy that I teach in the book has been around for over 40 years. Right? It's nothing new. It's been around for a long time. Okay, but people just don't know about it. Okay, so yeah, so hopefully this book will be released in the next week or two, and yeah, and it'll be available to all Trade Guide clients. Okay, so yeah, over to you, Gavin. That's all I've got to say about the book.
Great, thanks, Danny. Much appreciated, mate. And yes, well, I've just sent you an email from a guy, one of our guys that works with Trade Guider, who's very interested in assisting with proofreading it as well.
Okay.
So that'll be good. Right, let's go back to the Forex. We've had some alerts coming. Then I'm going to hand you over to Steve Phillips for the rest of the session. Been a good session so far. Let's have a quick look at what we've got on Smart. We've got quite a lot firing off here on the Forex.
All right, Gav, you might want to change it back to your screen, mate.
Can you see that? Okay. Everyone should be able to see the screen here. So just let me know when you can all see that. Okay, perfect. Thanks, guys. Okay. A lot of you are asking a lot about questions about Smart Center Pro. Okay, if you've got questions, just email Laura at tradeguider.com and she can direct the questions to me. So if you've got any questions, just email Laura at tradeguider.com and she will be able to assist you with any questions on that particular product. The web page, by the way, for those of you that want to go and find out more, it's on the front page of Trade Guider's website, which I've just put up for you. Bear with me. Someone just said, where do I find out more about it? It's just very simple. Just go to tradeguider.com, just here. Okay, we just had an alert gone off again on the British pound, so another alert on the pound. This is our website, just here. If you click on the Professional Trader tab, even if you're not a professional trader, you can see the British pound is starting to alert now, the euro and the Swissy. So we'll just put that down for a second. Yeah, click on this button here, Professional Trader. When you get there, this is information on the trading room that Steve runs, and I'll be in there with Steve next week. So come and join us. We'll use the Smart Center Pro in the room. And over here, if you click on this, that is the page that you want. It's got all the details of what we offer for there. Don't want to get into it right now because we haven't got time. There you go. If you're interested, you want to find out more, that video on the front page there shows the actual live trades that we took while we were at the CME, I think, so you'll be able to see that as well. Right, let's get going then. So we've got on the Forex here. All right, so let's just have a look. Let's go through each screen. I'll show you something quite easy that you can do. If you haven't got Smart Center Pro and you can't afford Smart Center Pro, but you still want to be able to find trades, you can still do it with our retail package. Let me show you how. I'm going to now switch from the Smart Center Pro to the Scanner Manager, which comes as part of our normal standard software. Okay. Remember, Smart Center Pro is most definitely aimed at the professional trader and the fund manager. Switch to the scanners, and you can see all the scanners come up for all the markets that I'm watching. Okay. Now, if I want to then show all of the scanners and very quickly go through to find which ones are in alignment, which ones are going up, which ones are going down, now brings up every single scan for every single currency pair. This also works, by the way, for futures, stocks. I'll do stocks very shortly. It also works for the futures market, as we've seen today. We're just approaching, by the way, the 2273 target on the S&P 500. So I'll flick over to that in a minute. In fact, it's approaching it now. We had an alert came in on that. But just so you know, here we can very quickly see there's short trades on the British pound CAD, potential short setting up on the pound Swissy, no trade at all on the euro New Zealand dollar, nothing on the euro yen. You see how quickly you can do this? Okay, here, nothing, potential shorts. Okay, potential longs. You get the picture. And it will, when it sees a VSA setup, like you've been seeing me use today, it will send you an email and tell you, hey, this sequence has appeared on the CAD JPY 15-minute chart. You can actually set it in the settings button to actually send you an email. Here, same thing. Here, mixed. You get the idea. So that's how you can very quickly and simply use the scanner. That's not in, it's built into Smart Center Pro anyway, but you can use it if you can't afford Smart Center Pro. You can then use the scanners in our basic tools, where again, if you go to the front page of Trade Guider here, and you just click on Retail Trader, okay, and here's our packages just here, which includes the scanners, not Smart Center Pro, but the scanners, and you'll see here what you can get, and it's a $297 price point over 3 months. Or you can buy it outright, which is what most people tend to do, which is the VIP package, which includes all the platforms that we cover. And the platforms that we offer are TradeStation, NinjaTrader, Metastock, not Metastock, beg your pardon, we've only got the scanners for Metastock. We haven't yet got the actual Smart Center Pro. And Sorry, I'm just looking at another alert that's just come in. Amazing. They're all coming in now. Typical. Just bear with me, Steve. I'm going to hand over to you in 10 minutes here. I've just got an alert that's come in again. Let me just switch. But there's the details. If you just want to go to those of you, there's a lot of emails coming, and I can't answer them all at the moment because obviously I've got quite a lot on. But here is the web page. We will send you an email out, though, with all those page links in it as well. Okay, so let's just have a quick look at the rest of these alerts. Okay, so you can see where they're coming in. British pound, looking for shorts. The euro, looking for longs. The reason it's looking for longs, you can see daily, 4 hour, hourly, 30, looking up. Wouldn't take any trades yet until these start to turn green. That's quite important. Okay. Pound Swissy and the GBP CAD. Again, short. There's not much on the rest of these currency pairs at the moment. They're still, as you can see, in congestion. Now, when a trade is not aligned, like for instance here, the weekly, the daily, the 4 hour, the 1 hour chart on the CAD Swissy is not aligned like this, there's no trade setup. None whatsoever. Here, no trade setup. Here, no trade setup. Here, no trade setup. Okay, so what we're waiting for is when this turns green or we see a VSA principle on the scanner in here, the alert will send you the audible alert, which basically tells you whether it's a sign of strength or a sign of weakness. Okay, there's quite a few questions coming in, so just bear with me if I've missed any. So just hold on. Okay, Danny, there you go. Kat, if you want to email me, Gavin at TradeGuide, GavinH@TradeGuide.com, Kat, I can put that through to Danny for you. That's no problem. Yeah, I don't think there's a price been put on the book yet, so just wait till next week and we'll have something. I know there's a lot of interest. We will get it out as soon as we can. We'll do a special webinar with Danny. Yeah, great. Yeah, I've asked Steve Phillips to do gold, and he'll also do the S&P 500, the ES, because the stock markets over since the beginning of the year have just been in a raging bull. And I think more and more traders are coming back to the market now, right at the very top. But we don't know it's a top yet. I have not yet seen any evidence to tell me that the market's topping out. It's no true evidence to say there's an end of a rising market, on the charts. Doesn't show it. So I would have to say that at the moment, if we look at the bigger picture on the S&P and the Dow Jones and some of these other instruments, that the markets are very bullish still, and I don't see any reason for them to not remain bullish. Okay. Right. Do you need at least 4 higher timeframes in the scanner to be aligned? Damien, that would be much better. That I always work with the top time frame and work backwards. So I work with the weekly chart and then the daily chart and the 4 hour chart. If those are all green, which I'll show you actually, I'll give you an example. Good question from Damien. I'll answer the question. So here we go. This is the S&P. Okay, so I've gone long, which you probably all know. And because I'm about to go to a meeting, I'm not going to let this trade run. But you can see that the YN and the ES have given me a long trade. Okay, so let's just now close this position out because I've actually got to go to a meeting. But so I don't like to let trades run. Okay, so we've got 87.50. We're at 272. We'll just bring that stop up here, and then we'll just lock in a little bit of profit here. Okay, now we're looking to try and get to 273. That was the target, which is the old high here. May well do it before I even close my, whatever happens here. Again, the whole idea is it's whipsawing in here. It's not moving. If it breaks out here, 273 is where I've got a point and figure. But I'm quite happy at the moment, knowing I've had a good trading day so far, to say, look, take a little bit of profit. A little, no one ever went bust in the market by taking profit. Nobody. If you take profits where you can, this is whipsawing around. I mean, it's not there is definitely a setup long, and it did go up to 227,250. Not far off the 2273, but you can't really make a lot of money in these areas. But if you can make any money in these areas, then you're a good trader. You know, if you can recognize the principles, and again, I'm going to show you why there and over here they've tested these levels as I thought they would. That bar came down, it was buying on the bar. The volume was high, we closed off the low, the next bar was up. Now, Smart Center Pro is looking for what we call trigger numbers. So it gave me the trade here, but it also gave me a trade here. Now, the market went against me initially, but then it pushed up here. I could have taken $100, $125 at one point out the trade, but I decided, no, let it run and see what happens. Smart Center Pro, I've got a projection here at the old top. You see where it closed here? There's your resistance line. Now, if I put a resistance line on there, okay, where this closes, look here, right? Just leave that on there. Now, we'll watch. Okay, so I've got my stops gone through break even, got back $50 of profit, so I've covered all my commissions. I've already made money in the pound anyway. Now I'm going to look to see if we get any more trades on the currencies. At the moment, there's nothing there at the moment. It's all the indices at the moment. But of course, we're Friday afternoon. This might blow off at the very end of the day. There's the resistance line just below 2273. It's not going through it at the moment. If it breaks that, then you'll have a big jump up. Very big jump up, but at the moment there's no volume supporting this move really. So if I can even get $100 out this move, I'd be very happy with it. James, thank you for that. Yeah, no, I've been bullish on the S&P for 3 years, but no one else is bullish on it. I've been bearish on gold for 5 years, but most people are like, oh, gold has fallen. It's just, the last 5 years, it's had a terrible run. Now, what I like here, this is one of Tom's principles. If the market is being supported, you'll get closes at the same price. They won't allow it to fall. Right now, they keep whipping it. Look, down, back up. We're in a 1 point range. To make money in a 1 point range in the S&P, I'm happy with that. There you go. Nice day. So there it is. You know, let's just talk about the principles, okay, here. All right. The market had a big rally. Okay, big move up to the resistance line. It's come back to a key area where they tested. Initially, the test failed, but if that was a weak market, we wouldn't rally again. So I went into the trade on this bar here because it came above, or after the widespread down bar, the next bar sprung. So we had an energy force to move the market up. Now, it wasn't a massive move. It was about 2.5 points in the S&P. Not even that, in fact. It was a 2270 to 226. So it's a 2 point move. But again, I'm trying to make profits in the market. That's my goal. That's the objective of what we teach you at Trade Guider. There is a key resistance line. If it breaks 2273, it'll blow through. Why was the trade there? What was the reason for going for the trade? Let's have a look at Smart Center Pro. Now you can see first and foremost that I'd set it, right? Well, I didn't set it. It set itself to find me a principle to trade. Note that everything at that point was green. Okay, as I took the trade. I've left this running. This was from a few minutes or 25 minutes ago. Here is your principles down here. Sign of 22. Okay, the test. Okay, if I come in here, there's your test. And you can see here, it's a test in a rising market because the market's going up. So in very simple terms, we're looking for testing as the market's moving higher. Now, I happen to take this test in a very congested area, but I still made money. If we go back to the British pound, okay, we can see that I participated in the down move, but then buying started to come in and they've moved the price back up. Now, there'll be another opportunity to get short here, but it's not here now. This bar here has just come in. It's going up on low volume. If this next bar closes lower, I'll have another opportunity to short the market coming into the London fix. Now, the London fix is in 3 minutes. It's a very important time. What happens here, in the London fix, all the shorts that were short from up here had to cover their positions. That's why the buying started to happen. And you can't deny that, you know, the software's correct. Look at the narrowing of the spreads. Widespread, and they begin to narrow, which is why I gave the target at 1.2338. Spot on. Spot on. It was exactly to the tick. Okay, and we're going to build that into Smart Center Pro where you've got a target which we can project. And I'm not going to talk about it publicly how we do that because it's proprietary. But what I will say is this. Next week, we're going to be doing, with the live trading room with Steve, anyone that's got Smart Center Pro will be able to come into the live trading room with Steve on Tuesday and Wednesday of next week. I'll be in there and we'll invite you in to have a sneak preview of what Steve does because he's a very, very good trader. He's using Smart Center Pro in the live trading room. So if you can't afford Smart Center Pro, you can always sign up for Steve's trading room from that link and participate with us in the room as we take the trades. Let me be clear, we're trading real accounts. We're not trading on demonstration accounts and we're not doing anything pretty much in hindsight. As you've seen today, the trades are there. Smart Center Pro brings them up in real time. It brings them up in multiple time frames. I haven't even got time to show you the stock trades, unfortunately, because we've run out of time. But I'm sure Steve will show you a few that we've picked in TradeStation. So with that, the scanner is Ron is saying, what is the scanner tracking? It's tracking unusual volume activity. Let's show you on the 60-minute chart. It's tracking unusual volume activity, like in here. All right. It's tracking where we see weakness appear. Right, so high volume and up bars. Again, simple logic here, Ron. This has to be selling in the market. Now, you'll look at it and say, Gavin, it's been going up. Well, of course, it's like the market stall. You buy it lower for 50 cents, you sell it for $1. You buy it for 50 pence, you sell it for £1. You can't buy it for 50 pence and sell it for 25 pence and make a profit. That's how the markets work. Most retail traders don't understand that. So they're using mathematical formulas as the market breaks out. They're going long and getting killed. Not with VSA. You've seen me take some trades today based on principles that are built into a computer program. I didn't have to do the analysis. The analysis is done for me. Because if you don't think that computers are clever, they're very clever. They do things that human beings cannot do. How on earth can a human being monitor all of these different instruments? And I'm monitoring all the Forex pairs, right? And again, we've just had, look at this, British pound, no demand. No surprises there on the 5-minute chart, a 15-minute chart. You might want to keep an eye on that, Steve, for your part of the session here, because that is alerting us. And again, the YM, and again, the ES, all of these are telling us a story. And the story is that, hey, the Wyckoff VSA principles are at work in all time frames, in all markets. What I found as a fund manager was the most difficult part was finding the trade as it's set up. The best trade today was most definitely the short on the British pound. Here we saw the up thrust, all right? And we also saw the market fall after that up thrust, and everything in Smart Center Pro had turned negative, meaning the market was weak. So the scanner is looking at volume, trend of price, and multiple time frames. And then it's looking for principles within those time frames. And I can tell you, if you see a sign of weakness on a time frame that's a higher time frame, like for instance, you saw an up thrust on an hourly or a 4-hour chart, your chance of a bigger move is greater than if you see it on a 1-minute chart. But these principles work. I'm not full-time yet, Mark. No, that's why I'm still doing this. Mark's asking, am I full-time with the fund? No, we're still testing quite a lot of things in the fund at the moment. I won't be full-time probably till June. So at the moment, I've got a little bit of time to do webinars like this and to contribute to the website and stuff like that. But you're going to be seeing a lot more of Danny Younis and Steve Phillips, who I'm going to bring in shortly, because they're going to be doing a lot more of the webinars and stuff like that going into 2017. I'll be doing less. Mark, let me be clear. When I said goodbye in that email, it was only saying I'm not going to post anything on YouTube because all the stuff that I'm going to record is going to go into for customers, VSA Club members, Smart Center Pro customers. They're the people who are customers of ours that we're going to support now. And the reason is simply we've got so many products now that we offer that we've got a lot of customers to support. We can't keep doing too many public webinars. It's impossible. But we hope that when we do public webinars like this, we give you value. You see that we're trading. You see that we're real. And you can see that we are showing you the principles live. We don't just sit there and analyze it. We take the trades if they're there. If they're not there, then we don't trade. Steve Phillips, as you'll hear, very cautious trader. But when he takes a trade, he takes the trade. Very simple. Okay. the US trader. Well, if you're talking about Abraham and Darren, both of those guys, which I'm really pleased about, have gone to work with a prop fund, trained by Trade Guider using VSA, and they've been picked up by a big fund. So they're no longer public at all. Goes to show you, doesn't it? So yeah, so they're no longer working with us. Yeah, Christian, the recordings are going to go on a special web page. For those of you that own Smart Center Pro, we did a special training course yesterday where, again, we traded live. You can go and see it. There was about 4 trades yesterday that we took. Again, we didn't lose any money on those trades, but we're always looking to mitigate risk. Let me be clear. Smart Center Pro is a very good tool, but it has to be used correctly. And what I mean by that, you have to learn to manage your risk, which means in my case, as you saw today, I moved the stops to break even fairly quickly. And even if I took a $50 profit, it's better than taking a $50 loss. Now, I'm trading big size. You can imagine if you're trading 20 lots or 100 lots, it's the same principle. You get to break even and you put your stop in and then you move it to profit. And 20 lots at 1.5 points in the S&P is a sizable amount of money. I'm not going to trade that publicly because it put people off, because a lot of people don't trade that size. But I can prove that you can make it with a 1 lot, 2 lot, 3 lot account. If you've even got just $2,000 or $3,000, you can do it. But you have to be disciplined and you have to have a trading plan. And next week, for all the Smart Center Pro users, we're going to do a special training course on the trading plan, because I've revised my trading plan based on trigger numbers, which you haven't seen yet, which I'm going to give you next week. No, Christian. Yeah, no, Christian. Today there's been a trade for $162.50 and 50 cents, so a couple of $100. But keep in mind, I'm trading a very small account. So for $5,000 account, and you make $200 a day, if you did that every 5 days of the trading week, which is potentially possible, that's $1,000 on your account each week. It's 20% on the account. I can't see. That's a massive amount of money. That's more than you're going to make in a bank. But again, it all comes down to discipline and a capital protection at all points, as I'm sure Steve will tell you in a second. So it's just gone 4:05 in the United Kingdom. Can I just say, have a great weekend, everybody. Hope you've enjoyed today's session. We had a short on the pound. We had a long on the S&P. And then there was another potential short on the pound, but I didn't get filled. I thought I had been, but I wasn't filled on it. There is now another short on the pound coming, but it's not here yet. But they're marking it up and the volume is drying up now. So we're just going to be patient, see if that happens. But Steve is also running Smart Center Pro, so he'll be with you now for the next hour or so. And for all of you, God bless, take care, have a great weekend, and I'll see you next week for live trading with Smart Center Pro for those of you that have it. Take care, everyone. Over to you, Steve.
Good stuff. Thanks for that, Gavin. Good afternoon, good morning, good evening. How's everyone doing? Hope you have an excellent weekend, Gavin.
Cheers, Steve. Thanks, mate, and you. And have a good rest of the session here. Keep an eye on that British pound again, Steve. And I'm still getting alerts firing off on the Nasdaq. I think that might break out. Keep an eye on it. It's at serious resistance, but if it does break out, that could push higher. But I think it's almost at the 2273 level when I last looked, and that could be quite an interesting one to keep an eye on that ES. They've slammed it down now, so I was right to get out that trade because they're coming back down to the support. But Steve, you're the expert. Over to you, mate, and have a great weekend yourself. Cheers.
Appreciate it. Thank you. Good afternoon, Jack, Mark, Wayne, Tom. Nice to see everybody here. Andre, Christian. Good afternoon, Graham. So what I'm doing is looking at the S&Ps at the moment and looking to see if it'll come down to the support level at 67.25, 66 level. If I get a sign of strength in there on the 15, 30, or 60-minute chart, I'll look to get long. If that doesn't hold, it just drops through. Looking for some scenarios to happen before they happen, so when they do happen, I can take advantage of it and manage my risk accordingly. Right now it looks bullish because of this effort to rise through this level here. There's a shakeout or a spring, and then a push higher. Because of this push higher, this level, these tops in here of 67.75 to 66.75 should get tested, and any shakeouts, tests, 2-bar reversals, good stuff for longs, and see if it will eventually challenge that 22.74 and a quarter level. If it drops through and all of a sudden gets down to 22.62, 22.63 level and holds down here, say, okay, well, they got them trapped now, and we'll probably see 22.59. So I'd try to get them short at 22.66, 22.65 and a half level. So there are two things to look for on the half-hour chart. It comes down, starts to hold, good stuff. Looking at long. If it slices through, I'll reverse my thinking and go short. Now, with this in mind, what I'll do is correlate that. Somebody wanted to look at gold. This is intraday stuff. Right now, there's a top in here on gold and a slight down move with a up thrust. Let's blow this up on the 60 so you can see it better. Now this bar right here is showing you kind of trapped it. 2-bar reversal right back up. Take this bar right here and put it over on the right edge, and at that same time, that would be a good short opportunity. By the way, back to 1188 from 1198. If the S&Ps come down and hold 2268, 2266 down in here and show some signs of strength at the same time, that'll be a perfect storm for a long on the S&Ps and a short on gold intraday wise. We got the Smart Center Pro looking for longs right now on the S&P, NASDAQ, and the YM. I'm looking for longs on crude light at the moment and looking for short opportunities on gold. When the market is in a bullish stance, and that's what's happening at the moment, you would expect the euro US dollar and the pound US dollar to have some pressure on it. So when the S&Ps come off a little, the pound US dollar, euro US dollar will typically go up. This is intraday stuff. And it just goes inverse. So if you're looking for longs on the S&P and it's in a bullish stance at the moment, I'd prefer to be looking for longs on the, or shorts on the pound US dollar and the euro US dollar. So just trying to get you orientated with market breadth and sentiment of the day and the correlation between the vehicles. Right now I'd like to see if it does break the highs and gets up to 2278 and holds higher on the half hour of the hourly chart. I'll look for longs at 2274, 2275. 30-minute chart. Here's a an up thrust here. I can't grab it. It's an up thrust looking bar here. It is a little light on volume and it's probed down, so it's not real significant up thrust. Now let's look at the bigger picture. On the daily chart, as you see, the gold is on a pretty major downtrend. It's caught in a rock and a hard place. It's just starting to turn on the daily. The weekly's still on a downtrend with the major trap move here. But as you see, the longer term downtrend, you would expect some type of weakness to show up here. 1211 on a larger time frame, all the way up to 1245. Any weakness showing up in there, I'll be looking to swing trade it short back down to 1211 and then possibly 1147. So if it sets up short at 45, I'll look for 1211 as a target. If it sets up at 1211, I'll look for 1147 at a target. If it does blow through, we'll probably see 1087 because of the downtrend still. And if that does occur, most likely we'll see a break in the highs of the indexes. But it's one of those, let the market tell us what's going to happen at those levels and then take advantage of it. Let's look at the weekly chart real quick here. You see that 11 level, it's kind of backing off of it at the moment. The weekly charts got a nice confluence up there at 2245, 2230. We got some technicals and the trap move. And this 2245 level is a key number based on this trap move here. A pivot low and a trap here. And you see that on the weekly chart, pretty powerful, 1245. There's the principle of a trap, go back up, reject it, and slam back down to some support levels. Same principles starting to show up here on the 60-minute chart. Came up, there's the trap. It's not as significant, so I'm expecting it to push a little higher. And again, let's see if the S&Ps will set up long down here. And that would be the perfect storm. Put the NASDAQ on the long radar here. So with the S&P, the YM, NASDAQ, and crude light long. Pound US dollar on the short radar, and gold's on the short radar. Hope that helped, Michael. I didn't even look down, but we just talked about some larger picture stuff. Still on a downtrend, so going with the flow. If the S&Ps start breaking and the indexes start breaking higher, you would expect the gold to come off some more. If the S&Ps roll over and start breaking down, it's going to go back up. But at the moment, it looks like it should bump its head and roll back down. I wanted to put a video out here, a video link, or I could just play it near the end. Right now, I'm looking for longs at 67, 67 and a half, 66 level, and I gotta wait for it to get there. The UK closes here in about 15 minutes. And we should get a little more volatility here within the next 15 minutes coming into that UK close. I'm looking for a stock here I got long in to pop through these levels right now. It's a USB. Just want to show you the setup. You can take a picture of. Ready to go. I'm looking for the USB daily chart. There's weekly. See, the weekly is exponential uptrend. Got a double bottom in here and effort to rise, and it's coming sagging off a little off the weekly charts. 1, 2, 3, starting to get a 2-bar reversal. It is Friday, but the reason I picked this stock. The financial sectors, I did an analysis about 3 weeks ago, and the financial sectors were acting stronger than the overall index. And then I went into the financial sectors and picked out the strongest stocks within that sector, and USB was one of them. I did a key number drill, put up some key numbers. Gavin was talking about trigger numbers. Those are crucial to understand where your profits are and your stops are and where your entries, and that will help you manage trades. Try to refresh your screen somehow. You should be able to see the USB here. I'm looking at my screen on the other one, and looks like I see the USB on it at the moment. It's the daily charts. I did my key number drill, and Gavin was talking about those trigger numbers. It's a great thing to have when key numbers to find your entries, exits, and stops. You got to know how to manage the trade before you even get in. The magic formula for successful trading is to be patient, manage the same risk every time, be right more often than not with taking the same setup over and over and over again. And when you get into a specific setup, you manage it the same way every time. And the big key, which makes or breaks a trade, is you risk less than you're trying to make each time. If the risk is more, then it might move in the direction you think it's going, but there's always that possibility it might not, and you're taking a bigger loss than you're trying to make. And, that's basically the holy grail of trading is understanding how to read the chart and manage that risk accordingly. The best traders in the world are really good at risk management and money management. Good stuff, Graham. I hope you have an excellent weekend and sleep well. Picked up a few good things from the webinar. Sure, we can take a look at American Express. Take a look at a few stocks as well. I got long here, by the way, back to the charts. Here's a nice setup at a key level. Had a nice test in here. The high of that bar was 59.29. I got long this day when it started pushing a little higher. I ended up getting long at 51.42. I do have some targets out there. So you can take a picture of this. There's a little gap up in here. Effort to rise through a resistance level, 51.19. Came back down. Volume's fairly low. Kind of heavy here. Revisited, never broke that low. It bounced back a little on lighter volume than the previous two bars. Blow this up so you can see it better. So it's a consolidation area, lighter volume than the previous two bars. Intraday wise, the market was bullish that day. So when the S&P started setting up long, I ended up buying USB long after a confirmation of the break of 51.29. And it responded nicely for a couple days. And now, yesterday, that's a test of these bars. If there's an up bar, it's a nice confirmation of that. And I'm looking for it to, I'm really watching this 52.24 level right in here, this high, closely. It made it up to 52.14 today. So it came real close to it, but at the moment, because the S&Ps are in a bullish stance still, I'm going to be holding it a little and see if it breaks through. So if it starts to test here and breaks through, that's good stuff. It hasn't come back to my support level yet. Go back to USB. Oops, that's the NASDAQ. So I'm looking for it to break this 24. If it breaks 24, I'll be looking for it to go to 52.68, which is the high. And what I'm going to do, if it blasts through there and gets up into these levels, that would be the S&P's rallying here. I'll take profits on, I'll take half off, and then I'll put a break-even stop in. You see, I got long. It's 51.43 is where I got long. It's been a what 3-day run so far. This is day number 4. And again, if we see a nice little rally in the S&Ps here at the end of the day, I'll take half off, put a break-even stop in, and then start trailing it on a smaller time frame. Not that much of a smaller time frame, but at the moment, my stop would be way down here, 48.54. So I'm going to wait for a smaller time frame to catch that up, and then I'll peel it off. But I talk about that more in depth in mentorship courses, and as we go along in the room, you can just follow it along and see how I weave in and out of those. Try to take the risk out of the trade as much as possible first. I did take an Apple setup a while back, took profits on it already. I think I took profits last Friday, or was it Monday? I think it was Monday. But, got a nice bullish stance here on the S&Ps. And the gold, that up thrust that I had talked about, we've got a new bar about to shut down here. And that up thrust is coming off. You'd expect it to get to 1188 if the S&Ps can continue here, which it looks like they're starting to firm up. U.S. Bank. It's USB. Thanks for that. It was a break of that bar. And then, nice to see you, Robin, by the way. It's been a while. Break of that bar, and then intraday-wise, the S&Ps were at support. Basically, if it was that day, they would be like at 66, 67, setting up long. So I bought them based on, okay, the market's going up. There's a sign of strength on the daily chart. It's one of the stronger stocks that's going. So I'll take a quick ride on it. If it breaks the highs, good stuff. But, and we'll see that historic Dow number. It has to rally 90 points. S&P's flashing at me. Take a look at some lower time frames here. Yeah, I'll jump on that AXP as well. Right now is pretty strong stuff here on the, there's a nice test here, or not a test, but some stopping volume shakeout bar. And right here, if that was truly selling with this volume, it wouldn't have snapped back over 60%. And right now it's responding. We got 2 days of strength. They shook it out pretty aggressively yesterday. Looked like a nice downtrend, and then turned into an uptrend. I ended up reversing my thinking, getting long yesterday. So I'm going short, now I'm going long. So that happens sometimes. You just go with the flow. And as an intraday trader, you have to change your opinion on a regular basis. Sometimes 3 or 4 times a day. And I look for the same thing every day, day in and day out. Let's take a look at AXP. American Express, that's a good one to look at considering the financials are acting stronger than the index. I noticed there was a lot of currency traders in here. If you have the Trade Guider software, the diamond trend, extremely powerful for currency trading. Currency trades on the daily 240. They tend to run pretty long, and this diamond trending system, excellent tool for that, along with your chart reading skills, of course. Right now, the daily chart AXB has a nice sign of strength, just real quick on the right edge. Got the S&P over here on another screen, so keep an eye on that. If it wants to pull back a little more aggressively, good stuff. What I'll do is a chart analysis on this real quick. I've got the Smart Center Pro going, and if it fires something off, jump all over it. Got a game plan of some levels that I want to go long or short on some vehicles, and see if the market will bring those levels to us and treat us to a trade. I did want to put a link in here. Oops, that's the wrong link. That was me trying to translate Miguel's question. It was in Spanish. I was trying to translate it. I believe if you can understand, the Gavin will be putting it in the VSA Club archive. Here's a here's a good example of trading less. If you've been struggling for a while, or you're just getting started, I really encourage you to stick with one setup at a time. Understand what it'll do for you in the long run, and then take that trade over and over and over again. And what will happen is you'll have a little confidence of mechanically following a trade consistently. And you don't need to trade a lot to do well. It's trading mistakes and trading accuracy is really important. So, that's encouraging you to master some setups and to consistently trade, and good things will happen. What I mean by financials, there's different sectors within the S&P 500. There's a tech sector, where there's tech stocks like Apple, and anything that's involved with technical companies. Financial companies are like banks, for the most part, REITs, things of that nature. Industrials is a Dow-driven. You get a conglomerates, I guess you call them, like General Motors. It is in the Dow intraday-wise, and crude light tend to run together, by the way. So I'm looking at different sectors. The indexes are broken down into sectors, and then there's stocks within those sectors. So I'm looking at, okay, well, the Dow's going up, so what sectors are going up faster than the Dow? And then I look at the, okay, what within that strong sector, what stocks are going up faster in that sector? And then you get those stocks that are really screaming to the upside. And I look at that intraday wise too, which index is trading up or down quicker intraday wise, like NASDAQ versus the Dow versus the S&P. Right now there's a nice long signal on this. Let's get to the weekly chart and check in on the 72.25 on the S&Ps here. Okay, the monthly chart, instantly I see this. It's a widespread bar and a pivot, and then another widespread bar down here. So what do you think may happen when it gets up to 78.41? So another pivot back in here with the slice here. Yeah, we'll definitely see a principle there. There's either going to be an effort to rise or some type of shakeout and distribution area again. So it's one or the other, and it's a really crucial level to look at. It's starting to cross trend again. Did it down here. And on the right edge, widespread down bar, shakeout. Well, yeah, another shakeout in here. Didn't quite go all the way down, but it is what it is. It's a reaccumulation phase with effort to rise here. So we've got support here, which is no surprise, as you see in the background. There's a lot of it down here. Effort to push here, then an effort to push here. You look in the background, that's where it stopped. And that's exactly what I'm looking at here. And that's probably where it's going to do something. So if there's an up thrust in here, take it right back down to this level at 67.34. You have this effort to push. Here, in the background, there's an up thrust at 53.80. That's the high. And you got a high in here at 49.19. So we go 53.80. This is really crucial stuff here. 53.80. If you want to structure trades, look for trigger areas. Smart Center Pro actually has paints in trigger numbers for us as well. 49.19. See, the S&Ps are 22.72.5. I'm still waiting for them to either break out or pull back. I want to manage my risk a little more. According to that 22.68 level, as a right under there as a stop. Grab this, 49.19. A lot of support down there, as you see. Low of this bar, 78.41. I don't want too many lines. Oh, look at that. On my chart. That high of the bar is going to be crucial as well. It is a widespread bar. The massive volume here, 90.60. And what I could do is get down to the weekly. I call these key range numbers in a playing field. S&P is 72.5. Makes much more sense now that it's on a weekly. You see how it came down. There's this reaccumulation and a jump of a creek, by the way, and a double bottom. Jump of a creek. So any pullbacks to 67.34 should go to 78.41. If it gets through 78.41, pullbacks up to 90.60, good stuff. Go into the daily chart. There's really no reason to fix this. These key levels at the moment they're lining up nicely. Definitely want to pay attention to some volume in here. A little effort to. It's a gap. Think a gap as a widespread up bar that you just can't see. So there's an effort to rise above this level, which to make 67.34 real strong. but the low of this bar at 64.75 is going to play a key role as well. Looking at some more volume in here, there's 58.89 and 64. Going a little further back again, taking that volume spike in the widespread bar, but you see how it's holding here. And this bar is really accounted for already, so I'm going to leave it. There's a possible 64 in there, but most likely it'll go back to 59. So there's a playing field, and it's on an uptrend on the daily chart after accumulation. We've talked about that. Weekly chart, it's just starting on an uptrend. We've got some distribution in the background. The monthly chart's just crossing over, so good stuff. Just we got to watch that 78.41. If the market rallies, we'll probably see 90.60. If the market rejects here in upthrust, we'll probably see upthrusting at 78.41 with a fade move back to 67.34. Hope that helped. That's how I do my analysis. Intraday and long-term stuff. So see, it's trying to break through this resistance at the moment. Market's up 27, 72.5. Sure, we'll take a look at that. Let's take a look at the S&P on the overall picture and the gold here. Two-bar reversal. Right now they're testing that bar. Light volume pullback, not a lot of conviction to the downside after this upthrust looking bar. Again, that 98's sweet spot in there for a short. 1188 good for longs with S&Ps right now. A little problem getting over the highs. They're starting to respawn from a nice little shakeout in here. S&Ps, tell me to take a look. Got a two-bar reversal on the 15. And I have a little steam there on the 5. Again, that's the 30-30. 601 minute, 60-minute chart. 60-minute chart looks fairly strong. If the volume was lighter, relatively speaking, it looks pretty decent on the light side. But you have an effort to rise followed by a light volume bar in here. Expectation it's going to break the highs. Right now, New York Stock Exchange is pretty neutral. Let's take a look at the pound. I don't have tick volume on my pound. The trade station doesn't have it, but I can correlate it with futures market, and it's all relative. But tick volume works real well too, because you see a signal on the futures market and you see a signal on the spot forex at the same time. It's relative, but not the same as the futures. I put a level in here for a trigger short, $1.2248. It's if the S&P set up short. It could get down to that $1.2036, but right now you'll see a lot set up because it's in the middle of the playing field. You see this trap move in the background, and a double top and a trap move. It goes back up in there and gives you this. Take this bar and put it over here, you'd expect it to fall off. There is a pivot low in here. It's low in here, and you can see that there was a reaction. Oops. And then pushed it back up. So on the way down, $1.21.67, $1.21.67. It's a nice neutral point to shorts at 48, $1.22.48. There's some nice, good 90 pips in there. 80. Nice move in there though, with some short opportunities at the trap move. And 60-minute charts ideal with some up thrusting in there. And in the back in here you got an effort to push. And that bar is showing that, okay, they got them. This was, maybe they don't. And now they do. And the reason I'm looking at this is going to affect the right edge of the chart. So you look at the pivot low of where they got them. It's right about $1.23.71. Could get up into those levels and reject as well. $1.23.71. You see where it drops. So any up thrusting or two-bar reversal signs of weakness, you'd expect it to come back down at 48. So you got some key levels in there, but I wouldn't be trying to go short on the pound right now. The S&Ps is the little engine that couldn't. Right now it's starting to crawl up and then it kind of staggers and chops. The past hour it traded in a 3-point range. And in the last 50 minutes, it's again in a 3-point range. So basically, the last 2 hours we've gone nowhere fast. Good stuff, Pete. Hope that helped, Andre. Good stuff. Yeah, I'm looking forward to reading that. I want to take a look at that, Danny's book. When it behaves itself. General Motors. Doesn't move a lot, but it's pretty stable. Yeah, actually, Abraham was in my trading room for quite some time. I was running the trading room with TradeGuarder back in 2011, and Abraham went through my courses and hung out in the trading room for about a year and a half. And yeah, it's nice to see people take that education and really advance themselves. Makes you want to continue to do what you're doing. It's nothing more rewarding than helping somebody achieve their great dreams and live the life that they really want. Takes a lot of discipline, though. It's not a get-rich-quick scheme. So 95% of us traders don't do well. 5% are successful. So as traders, when you get into the realms, to be aware of that. That's the numbers that have been out there for quite some time. So if you're methodically moving that account forward and not having a negative down draw on a regular basis, good things are happening. But it's, it's inevitable. You're going to have to weather some storms every once in a while. So once you get the setups mastered, you got to get your head wrapped around it. I'm just talking from experience as well. There's a lot of things that go on once you get into the market. Trading is never going to be perfect, but perfect trading is following your game plan and planning the trade and trading the plan. Because you're never going to get out at a top when you're selling, and you're never. It happens once in a while, but it's inevitable. You're always going to double guess your exits and entries is if you don't have a specific game plan in mind. I use the Smart Center Pro all day long, and I started a USB trade this week. And it's running at the moment. Still looking for the market to possibly take out the tops here. Looking for it to pop through and possibly get it to 24. I'll watch it real close in here. If it does get through 24, I'll expect it to get to about 68. If that's happening, S&Ps will be taking out this 74 level and rising up. Goldman Sachs trending in alignment to the upside. S&Ps on radar for longs. Sure, Courtney. So I haven't pulled the trigger on any day trades this morning. All's well so far this week. If you get a chance, watch that video that I put in. If you didn't see the link, I'll shoot it out to you again. Really encourage you to heed that. That's good stuff there. Strict rules. Good stuff, Mark. You said it yourself right there in that last comment. Put a lot of discipline in place, and it'll reserve you from pulling the trigger. Matter of fact, one thing, he went through the mentorship course, and then after that, it hit home with him that because I take notes too with my pen and paper all day long, but because you monitor your trades and track them real well, he was tracking, okay, when did I get in on a signal, and when did I get in because I thought I was going to miss out or just jumped in at support or resistance. And when he cut out he called them hunch trades, he realized that he was trading less and doing better. He ended up getting chopped around in those hunch trades. So a lot of discipline. It takes a lot of discipline. Sometimes there's two days without a trade. Then there's a day you get 3 or 4 setups. Also, consistency is the consistency in trading. How many setups can you manage? If you make trading mistakes, that's just like taking a loss. It's and then say your setup works 6 out of 10 times, and then you make 2 trading mistakes out of those 10 times. And all of a sudden your setup's working 4 out of 10 times, and then now you don't have an edge. So really crucial to get your head wrapped around those. Less is more. Systematically getting in and out of the market and having a game plan before you even enter the market, so you know what your risk reward is. And managing 1-2 setups at a time. You start managing more than one, all of a sudden you lose focus on something. and you could have cut the trade based off of some criteria to get out early, and next thing you know, it's up near your hard stop. Those types of things. It's really important to stay focused, and as you noticed when Gavin was trading this morning, he was really staying focused on his trades when he was in them, and then he got back to the questions, and that's pretty crucial. Sounds good, Jack. Hope you enjoy your dinner and have a great weekend. It's nice to see you again. Hope that helped, Mark. It's a good question. Actually, I think I can do it right here. Right click, push settings. I took a lot of, I tried to put music in there on the uptrend, BSA, sign of strength, downtrend. Now it just beeps at me. I do a 60% alignment of trend, 6 out of 10. I'm showing the black box in the Smart Center Pro after startup. The trigger parameters, I'm doing 25 bars. I switched over. I want to use the trigger numbers and consider price action inside the trigger. Indicators, I went through and I picked the ones that I really like. Oops, I don't want that. That I really like on the long side and that I really like on the short side. I took some out because I didn't want to hear every single signal, but they're all real solid. But like I was talking about earlier, if you have an expectation of specific setups, and you take that same setup over and over again, good things happen. And if it's not set up, you're not missing anything. It's just a bunch of market noise. Even though, it could move from A to B. You got to manage risk and understand that specific setup to do it over and over and over again. I took my alert sounds off. I was going to change it to music. That didn't happen. And I do a 25, and then my indicators are a little sparse, but I really like these ones. Up thrust after weakness, 2-bar reversals, up thrust, 2-bar reversals, up thrust after supply. In a rising market is an excellent setup, specifically on the weekly chart. It's hard to go wrong on those. So I've got them tapered down a little. I will after I watch it for a while, but I couldn't tell you off the bat. So if you have a number up here, then there's a widespread up bar on here. It doesn't quite make it yet. What's happening before it? Is it distributing before? And will it alert me ahead of time based on the price action? But I'm going to have to watch it for a while to see specifically, because it's fairly new to me on that particular setup. Yeah, Robin, you've taken the mentorship course. Are you referring to the trend? We're getting a nice push here. This is good. want to take some profits on USB if it can get up to that 51.30. It's very helpful, Jerome, but there's a lot to it. As you know, as you've heard me talking about, reading the charts and understanding how to get in and out is part of the battle. Money management, risk management, market breadth, and market sentiment. Sector strengths, overall market look. It's very helpful with the settings on the diamonds. Excellent way to manage some trades. It's not mandatory, but it's helpful, very helpful. What's really good is to understand how to read the imbalance of supply and demand based on accumulation and distribution. Yeah, the New York Stock Exchange tick chart, it's a 1-minute chart here, and what it's doing is it's just measuring how many stocks are going up in the New York Stock Exchange versus going down. Right now there's 167 going up more than going down. And the reason I look at that is as soon as it starts to rev up a little, the stock market revs up, the futures market and the index start revving up too. They have to follow. And then I can look at it and go, okay, well, it's kind of neutral. You know, it's been up about 400, down minus 400, up plus 400. See what it does when it comes to the zero or if it starts pressing higher here. But right now it's a bit choppy, and as you can see, we've been talking last 2 hours here. It's been in a 3-point range, so that's why I've been, not really looking at anything intensely. I don't want to trade in the middle of the range. I want to buy the pullback. Or if it breaks out, holds higher, then I'll buy a pullback at 75. Always buying pullbacks in the S&Ps or indexes. There's a sign of strength here. It's got a tail on it. And it's a light volume bar. A nice shakeout on this bar. On the 60, they're both 60s, so they kind of look the same. Hey, there's 2 of them. 30 minutes, same thing. Good stuff. 15 minutes. This thing's going higher based off of what I see on the right edge. We're going to buy the high at the top of this bar at 73 and hope it gets through 74, 74 and a half, and then put my stop way down here at 65 1/4 because that's where I would want it. So I want to put my stop in an area where if I'm wrong, I should be going short, and it's going to, if it slices through here and holds lower, I'll reverse my thinking. And there's a huge ledge in between this, so it could just do a little bump to the upside and hit that 74 level, and then boom, right back down. So again, risk versus reward, not good, but it does look like it's going to go higher. Based off this hourly turn, a lot of things are lining up. Specifically, if it breaks 72.75, so if this bar breaks 72.75 within the next hour, before it goes under 69.75, it should go to 74 1/4. Yeah, candles are good. There's an upthrust here on gold, by the way, at resistance. There's the trap move. There's the pivot low. There's your upthrust. What's going to happen, though, is the S&Ps are going to have to fire off and get through the highs. Now, here's an excellent example of a sign of weakness on gold over the S&P. pretty much the sign of strength here. It's a shakeout. All in the same spot. You see that a lot. I'm not shorting gold, by the way. I look for shorts at 11.98. Conservative trader who knows the importance of managing the trade solid and not forgetting about trades, making trading mistakes, and constantly keeping that account crawling forward. And making sure I'm correlating the market breadth as well in market sentiment. Actually, yeah. See, Robin, do you see this camera up here? I can't see it, but I believe you can see it right above my arrow, top right. Yeah, what I'll do is I'll pull up the settings. This will make it easy. Maybe take 2 pictures of it. I'll do the top first, then I'll bring it down halfway. Cheese. Okay, this one I can get down there. This one right about there. And I'm going to move it again. Not a lot there. Stop with that test. More on the long side, it looks like. And I believe one more. I don't know if there's anything underneath there. I'll check it out. I'm going to move it one more time. Nothing. Okay. See how the S&Ps are doing. Good stuff. It's a nice thing about being here every day in order to find me and get stuff done real quick that way. Drill me with questions, I don't mind. Like I said, I'm a slow, methodic trader and wait for some key levels to come in. Yeah, doesn't it? It looks like a bit of a flag. Lower lows here, kind of sideways, but you can take this top and here. That's just on the 15. Which way did it go? There it is. There's a whole bunch of people in here, a handful of people in here have been with us for quite some time. See a lot of familiar names, a lot of new people as well. Just encourage you to stick with it and slow, steady, consistent, good things happen. See, right when I thought I was convinced it's going up, look what it's doing. Let's see, this here. Might blow right through it, but yeah, that's what you're pointing out there. We could level it here. It's kind of a wedge. But it's definitely winding up for the pitch. I think anybody can make it. It's just a matter of having discipline. Learn the setups, understand supply and demand, accumulation, distribution in the game of institutions trapping people. They try to get you on the wrong side on a regular basis so they can take your stuff and run with it. Yeah, those are good ones, the black ones. Breakout bars. It's creating some energy right here with all this 3-point windup. This one got washed here. Oops. Can't grab it. That one. That one broke down. That one broke up. That one broke down. And that one got washed a little. Not too bad though. It kind of broke down. But yeah, it's good stuff there. Get scalped, but they're pretty solid. That's inside bar didn't do anything. That one broke down. Boom. Broke down before it broke the high is what I'm talking about. Or it broke up before it broke the low. Ticks of changed behavior. We're 12 on the Dow. It's been, I don't see anything right now. I thought I was going to pop higher, but it is what it is. This last hour, again, 3 points. 3 points. So the last 2 hours and about 15 minutes now, 2 hours and 10 minutes, we've been trading in a 3-point range. If it comes back down to 2267 and doesn't break the highs like I thought I was going to, I'll be looking for longs. See if it'll go to that 2274. If that 66 doesn't hold like I was talking about earlier, all of a sudden we're down to 2262 and it closes lower on the half hour of the hourly chart. Start looking for short opportunities at 66 1/4. Now, if it just breaks the highs and continues, it gets up to 78 without me, and holds higher, 78.5, and holds higher, then I'll buy pullbacks at 75. I've got a game plan, but right now, well, kind of chopping around in no man's land. A great way to dive into the deep water and then get drug a little deeper where you can't touch the bottom, so to speak. So I want to be down here, in the shallow end, so I don't get drugged too far into the deep end. You jump in here, you're in the deep end. Jump in here, you're in the shallow end, because the stop's right underneath. That's what I'm referring to. Now keep that in mind, those 3 scenarios. If the S&Ps break through that support level, watch gold. It would most likely be up in here around 1202. If that happens, I'll buy pullbacks at 1198 with the expectations going to 1211. Let's go back to the daily chart here. Screwed light. 12.11.6. So widespread up bar, down bar, light volume, but down bar, shakeout, test, 2-bar reversals, expecting to go to 12.11. If it rejects here at 11.98, the S&Ps will most likely be holding this 22.67 level. So if there's a long here on the S&Ps, look for that short opportunity at 11.98 on gold back to 11.88. See USB's pulling back still. When you're looking at the pound, if the S&Ps reject, as you see, they're at that old top with the nice up thrust. It's I was pointing out these levels on the larger time frames. There it is. If the S&Ps hold that support, watch for resistance or signs of weakness at $22.48. Expectations going down $21.67. If it holds at $21.67, a little back and forth to $22.48, that would suggest the S&Ps just fell through resistance. If the S&Ps do fall through support, which becomes resistance, I said it backwards, you would expect the pound to try to push through this 22.48 with the widespread up bar. Just basically turn the chart upside down. The S&Ps, boom, push down, pound pushes up, widespread up bar followed by pullbacks. If it's stretched into $23.71, $23.80 level, I would look for weakness up there as well. See if it'll go to 22.48. There's a widespread up bar. Basically, take this bar and put it over here, and it's stretched into that 22.37. I would actually short into it with a scalp trade, $23.71, $23.71. But it would have to come from at least $1.23 or lower. The euro is a little more conducive of that particular setup when it comes to the scalp trade. But you get the idea. There's a nice playing field in here, and the indexes are going to give us a sentiment of the day, where if they do one thing, the market's going to probably follow suit, meaning if the S&Ps come off, euro rises, pound rises, gold rises, crude light comes off. Things to consider when you're trading there. But bottom line, I've got some nice things to look for before they happen. And when they do come to fruition, I'll jump all over it. But I don't mind trading less as long as I'm pushing that account forward. And hope you're able to watch that video to get you on the right track. Just less is more. Just keep moving forward here. Let's see. Don't watch the VIX much, but it is a good indicator if you do watch it. There's nothing wrong with watching that. And yeah, it's always good to watch internals. I watch the tick and sectors in the cash market. And of course, you know, if the gold and the euro are trading down and the indexes and crude light are up for the day, and most of the sectors are green, it's a pretty positive day. So when it comes to internals, I look at the tick and the cash market more than anything. But yeah, the VIX is good stuff. Dark. Dark. if I use that word. Could you use it in a sentence? Welcome in, by the way. Wish you well in your trading venture. Here, I'll put that link in again for you all as well. Here you go, Jim. There's multiple Jims in here, by the way. And Jim S. was asking for the link. Yeah, there we go. We're getting, the ticks have just fallen off and the stock market came down with it. It shows that there's 720 stocks going down more than going up. Normally I would be scalping into this, but anybody long may be getting swept here. So it's not the right time to be scalping into this thing. So what I'm going to do is wait for this to, because it's, like I said, it was winding up for the pitch, and the pitch is down here. But what do you suppose? We got a down move. Are they selling into it? It's just going to sell off and completely come unglued, or is the professional money, like we talked about earlier, going to reaccumulate, try to push it through the high again after this effort to rise? So a few things to consider, crucial levels here, and something to watch in the next half hour, 2 hour. We got 2 60-minute charts up. Let's see what we got going on here in the smaller time frames. Looking for longs at these levels. Any stocks that are setting up long, it's Friday. It's good stuff as well. When I'm on stock radar, look at those early off in the week. But if there's a long setup on the weekly or the daily chart, and the indexes are coming into support, and they do set up long, I can get my timing right there, and just like I did with USB, you get on the right side, hopefully, the right side right away. That's the objective, at least. Nothing's absolute in the market. You always have to play the edge. And as long as you're humble enough to understand that the market can pretty much do anything it wants at any given time, you'll be successful. Just change your opinion based on the facts, and it's okay to be wrong. So take a look at the weekly chart. It's not over yet, but got a game plan here as things are starting to set up. Hang out for a little bit, just in case we get something that swings over on the 15. Take a look at the weekly. And so we're getting into the end of the week here. And what I'll do is I'll go over stocks first thing in the morning on Monday. Look at some sweet spot setups as the week goes forward, see how it finishes. We've got a lot of time left in the day, so a lot of things can happen here. Could break the highs or boom, come right back to 59, 56 levels, start testing. Then we would probably see an upthrust on the daily chart. Pushes higher, it's just continuing from a shakeout looking bar. Daily chart, this is the bar I'm referring to. Looks pretty strong here. Starting to round a little on the moving average. Over the weekly. And do the same routine day in and day out. Sometimes I really get into the zone. Just concentrating on a few things at a time. If it finished like this, would that be a sign of strength or a sign of weakness? You guys are troopers for hanging out. I've been here for quite some time. Look like a sign of strength. Another shakeout. The volume's a little heavier, but as you see on the average, it's lower. On average, there's a moving average in here in the bands. The expectation will probably see new highs. Yeah, good stuff. You'd expect it to push back up. Now what happens, what will happen if I get long down here? I believe it's 10, but I don't know for sure. There's probably a way to look at it. It's in the doesn't say. It's in the trade guider program. It's probably proprietary, but I think it's 10 or 14. It's just a moving average. But the bands are a different story. It's relative, it looks like. And when it gets into those salmon colors, you know you have something going on where professional monies are reacting. Right now, it's suggesting widespread down bar into support with a lot of volume is absorption, and they're buying it, trying to shake out all these people that try to get long. Oh no, it's going down, I'm going to lose all my money intraday-wise, and they're going to suck it up and try to push it higher. Now the problem here is they just trapped it, and there's going to be resistance at 69.5 on the way up now because of this. So it may have to round up and do another test and then pop up. But the weekly chart looks strong. Suggests crucial to look at those weekly charts over the weekend. It just comes back down, and also we're down to the lows again. So, thanks for that, Robin. Yeah, it's a preset, Jim. But I think it's 14. That's the feedback I got. 48.5 is the low. So if it gets down to 22.50, all of a sudden we got an upthrust. So look for it to test in here one more time. It might get it choppy again, and don't get fooled. It's because there's some support here. In that effort to rise, it could slice through, and then boom, next thing you know, we're down to 55. The Dow is minus 25, and ticks changed behavior, got down to minus 600, went to 0, still trading in the negative. When you see a low tick like that, you would expect a bounce in the market up, and the 0 tick to get breached back into 200, 300, back to 0, chop, 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 up to 300. That would say, okay, there's a reversal here, and it's going back up. Right now, it's suggesting, yeah, we're going to press down some more and see what's going to happen at the lows. Reading price action based on the stock market. You do this day in and day out, and pretty soon you'll start to just become second nature after a while. I got to fix my volume. Looking over some questions. Dark. Not sure what I said when I said dark. Just looking at the overall market, see if it'll break 0 here. Minus 18 on the Dow. Be careful of the chop. It's Friday. Something solid sets up though on the 15, 30, or the 60 down here at 66. Expectations going back to 74. We're at least challenging the highs in here at 73, 73.5. If there's a resistance level, we'll say at 74, 75, and I'm looking for profit, I like to take them about 74.25, get right in front of that resistance level. I don't want to be too particular about 1 or 2 ticks. It's not exact rocket science as long as it's real close. And the risk is better than the reward. I'm going to step away. So there's a couple things that could happen here. I really encourage you to watch it closely. See if they slice it through and hold it on the 30-minute chart. If it slices through and then closes lower on the 30-minute, it could go here, boom. It's probably going to 55. If it just stops here and then reverses and does a shakeout or a testing or 2-bar reversal, watch for some higher moves. If the S&Ps stay up in here at 67, 68, expectation we're going to have a breakout of the highs next week and a little push higher. It is options next week. Should make for some interesting volatility near the end of the week. But appreciate everybody hanging out for so long. You guys are troopers for hanging out here for quite some time. Sometimes in the trading room we hang out a little longer than 3 hours, and if it's just kind of quiet, well, it's just kind of shut it down and wait for the next day. But look forward to seeing a lot of you in the trading room Tuesday and Wednesday, and see a lot of the regular members back here bright and early on Monday. Hope you all learned something good. Take something away, and have an excellent weekend. Take care. Talk to you soon.